All right.
What's
You
up,
better say it in
everyone?
private chat. We're live, everybody. Welcome
Okay.
in. Welcome to the worst produced show on the internet. My name's Fars. I'm here joined by a bunch of great gentlemen here. We'll have Alexander Mertz and others joining us a little bit later on as well. As you can see on the screen, it's a whole party. We got Yashu from Hit That Bid. We got Herbert from Brighter with Herbert. We have the amazing Jeff Lutz, who's constantly on Herbert's show, supply chain expert. We got Emmett, one of the most buff dudes you'll ever see in your life, one of the most talented financial analysts out there. And we also have Hans, who covers the automotive and AI space very closely. And all of these gentlemen have different ways you can follow them, either on YouTube or on X. We'll have our mods drop everything on the comment section below. And as Emmett decides to leave and probably comes back, maybe he's changing his shirt, who knows, we'll get started with our conversation. So I'll have you take it off here, Herbert, maybe if you want to sort of kick us off with what you're hearing about the stock market or the Tesla stock. I know you guys cover this very closely on your channel, and then we'll turn this into a conversation.
Yeah, I think the way I'd like to start with this is that I am expecting one big thing to happen at the earnings call today. And if it doesn't happen, I've been warning people, I'm going to be gloomy with Herbert for like at least a month, if not a whole quarter. And what I'm expecting is I need Tesla to come out very clearly positioning Tesla as a robotics AI company. If they don't do this and they don't set the stage up and give examples as well, give some reasons why they are, great. We're going to hear numbers about the auto business. We're going to hear projections and guidance for how many deliveries they'll have. We'll have updates on the gigafactories, 4680 batteries. All that matters. But what really matters these days is robotics AI company. There's been an AI boom that's been happening last year, from beginning of last year to the end of last year, now spreading to Fortune 500 companies. You have the best AI engineers looking to go to the places that most excite them: NVIDIA, Meta, Google and DeepMind, and of course Microsoft. And so what we need to do is solidify this. There's a lot of bot companies doing demos. We've got these announcements by Figure being able to partnership with BMW. It's fantastic what Tesla's doing with FSD version 12 being released, and with the bot showing off that it can now do the folding of the shirt, but of course it's teleoperated. Very soon it'll be able to do autonomously. And then the Gen 2 bot, right? But they need to show us the progress of Dojo. They need to show us that they have the largest supercomputer in the world, and that there's going to be progress for FSD 12 and of course the bot. If they don't do this, I'm going to be very, very sad. So what do you guys think? Am I off my rockers?
Who wants to take it? Yash?
Yeah, I'll take it. First of all, Herbert, I love the energy. You're totally right? Because I mean, the Tesla bot is so topical, but I'll take this slightly to a different degree. I think FSD should be the main play for earnings call in terms of deep dive. And obviously, FSD 12 is out. Early results are that this is a step change forward. Now, if FSD 12, and Elon has said in the past, was not supposed to be a beta and eventually might get there, I want to know the rollout plan or details of what Tesla is thinking about for the rollout plan. Because if FSD 12 is that close to what Tesla will have in terms of robotaxis, obviously not perfect, it only makes sense for Tesla to talk about their rollout plan for robotaxis and for full self-driving. So I really want, during this earnings call, for there to be a large basis of it talking about FSD.
Emmett, we'll have you go next since your shirt's already getting a lot of attention.
It's a festive shirt, for the cyber owl, it's a little tight, the Tesla shirts, but I decided I'd wear it anyway. But I do think, institutions are what really drive the price. Retail investors are all interested in all the things you guys are talking about. I'm interested in it, but I think institutions, it's all about the gross margins and the growth, projections for next year, and any indication of whether gross margins are going up or down, next year in 2024. So, I'm thinking the stock is going to drop, further, but it'll be an excellent buying opportunity. And I've got a little bit of, hopefully, if it drops, I'll have a little dry powder to buy some more, hopefully, when it gets lower. So I'm thinking this might be the last big drop, and then the bot, all this stuff that we're excited about, institutions, it's just pie in the sky stuff. They can't make bets with billions of dollars on those hopes. So I think when the Optimus does come out, or when FSD does show higher adoption rate, in the financials, which will be several quarters away from now, or when mega packs really ramp up deliveries, or Cybertruck shows ramped up deliveries with good margins and improves the overall auto margins, I think that's when the stock will really start, hitting its next growth phase. But my feeling is that could be 2025.
Jeff, a newcomer to the sort of mega stream. Welcome in, Jeff. If you follow the Tesla story closely, you know him quite well. Let us know where your head is at, my friend.
Yeah, I tend to agree. I don't think these earnings calls are normally product announcements. Sometimes I do agree, though, that they do get into conversation. So maybe there will be a few minutes talking about FSD or the progress on the bot, but generally, I do agree that the institutions and people are looking at current quarter, next quarter, and full year performance and guidance, and I think they're looking for a couple of things. One is they're looking, is Tesla reaching a point here where gross margins are stabilizing? And I want to break down that for a little bit. If you look at what's happened with the price cuts, there was I call them price corrections in the first half of last year. It's kind of a tale of two halves. January to April, they were massive. They were, north of 10%, and they were global. And there's no COGS program or routine in any company that would actually be able to keep up with that. And what happened, though, in the second half is now they started becoming regional. They started becoming trim-based, and they started reducing. But then Tesla shut down their factories, did all these upgrades. So Q3 is messy. So I'm looking for Q4 to be that quarter where the price reductions are now less than their ability to improve COGS in a quarter. And I believe they're reaching that point. I've analyzed the most recent pricing changes, and to me, they're inside of the normal window of any company being able to improve their COGS structure. And there's no auto company, or really actually any tech company, that turns their inventory faster than Tesla and is able to pull changes in faster than Tesla. So I think the street, I was just looking at, I grabbed a screenshot during an update on CNBC. I think there's a consensus estimate of 15.7. I'm sure there's another consensus estimate, again, ex-reg credits. I think they're going to beat that. I don't think they're going to take another half point down in gross margins quarter over quarter. I could be wrong. It's very hard to predict these things. Sometimes there's special charges and so forth for ramping the Model 3 or the Cybertruck. But in general, when I analyze, this is what we use this term price cuts, and it kind of turns into the boogeyman. Like people are like, oh, there's price cuts. Well, how about let's understand and let's do some modeling on the supply side and understand what they're capable of. The price cut routine has changed, and it's become regional, trim-based, smaller. Believe it's inside of any COGS reduction program. That's what I'll be looking for. And I'll be looking for them to give guidance. Last year in January, they gave guidance on the earnings call, for kind of they had a goalpost of 1.8 to 2.0. Maybe they'll do the same thing, or maybe they'll just announce that their capacity installed is this, this number over 2.3, and they expect to be utilizing it to a great degree. They may say something like that. We'll see. So gross, and then also last year in January, they did comment that they intended to keep gross margins north of 20%. Obviously, that didn't happen, but it was within a few percent of that. So it'll be interesting to see if there's any other commentary, because after that call, it turned into, the crystal ball comments. So will they forecast gross margins? Will they forecast volumes, or will they lean back on kind of what they've been doing? But I believe this could be hopefully a trough point.
That's awesome commentary there, Jeff. Thank you. Hans, any thoughts on what Jeff just said, or anything else you'd like to mention?
I always love Jeff's commentary. I think that for me, one of the things that I really am just curious to hear today is updates on Dojo. I feel like that's something that, they put out that graph of trying to get to 100 exaflops. And that's something that we've gotten pretty regular updates on. I'd love to see where we are on that. And then also to build a little bit on what Yashi was saying, we need an update on the graph of how many miles do we have on FSD beta. We should be getting really close to that 1 billion mile milestone. And so those are big for me today, as we're looking at really, I think AI, to Herbert's point, is one of the big things moving forward. And so we want to see the progress of that in FSD. We want to see the progress of that in Dojo. And then I'm not sure if they're going to share anything with us today on bot or not. We have been getting really regular updates of sorts on bot as well. And so, yeah, just looking at kind of core technologies, also the 4680 ramp progress. I know that that's one of the huge questions that is out there for the retail shareholders. Very curious to see what they have to say on that in the next gen vehicle platform as well.
Yeah, I think I generally agree with all the points that have been said here. I think from my standpoint, the thing that I'm looking for my biggest thing is the bottoming out of margins by far from the auto perspective. But I think as we look forward, the auto margins become sort of this weird thing that once FSD takes hold, if it takes hold, then the auto gross margin today becomes completely irrelevant. It becomes, okay, how quickly can Tesla ramp up this software service that will have essentially 100% margin that they can tack onto the cars. And then we have the bot quickly thereafter, because if you can prove out that the FSD software works, then the bot should follow as well. You have energy ramping into basically an unlimited TAM. So it's like I'm trying to balance the short-term and long-term story. And for the last year and a half, it seems like the story has been very much short-term to medium-term. But I do feel like there might be a turning of the corner, not just from how investors view the story, but what Tesla is executing on. A lot of these things that have been in the back burner, theoretically, meaning that people haven't really had a lot of exposure to it. They haven't seen it in front of their faces very much. These things should start coming to fruition. And so for me, it's like, okay, is there more signal that's proving that thesis out, that we're getting closer to FSD being complete, that we're getting closer to bot becoming a thing potentially, we're getting closer to the energy sector ramping. It could be, none of that could happen this call, but those are the things that I'm going to be looking for. And then definitely saving the worst for last. Matt, go ahead and share your thoughts.
Oh yeah, that's all.
Sorry, I forgot I gave Hans the keys.
Appreciate the warm welcome as always, Farzad.
You're welcome.
And also, I just wondering, do we know who the father is for the producer wife's? I know she's expecting. So, congratulations! I'm sure you're involved in some way, but I don't know if you're in a foster father situation here. So, congrats to producer wife.
You son of a bitch! Go.
All right. Well, picking up the actual commentary on Tesla. So I kind of like what Jeff was saying in theory about margins bottoming out. But when I'm looking at the numbers and the magnitude of the price cuts that we saw in Q4, I'm just not getting there. I'm kind of like the guy on Price is Right who just bids $1. My earnings estimate is so far below not only the other kind of Tesla analysts out there, but also Wall Street. So Wall Street's at 73 cents. I'm at 65 cents for Q4. And the reason is I'm just going through the math of the roughly 15 to 20% price cuts we saw on Model S and X, the $2,000 price cuts that we saw on 3 and Y, at least in the United States. And then I've seen a fair amount of discounting too on some of the list prices that weren't on existing inventory. So when you're not doing the build. So I'm seeing a lot of margin pressure accelerating into Q4 that I think people might be underestimating. So I'm probably more in the bear camp for the actual numbers that we're going to see in Q4 for all those reasons. But I mean, going forward, I think everyone's really hit the nail on the head. The story is, okay, how much does the kind of short-term noise of the real legitimate margin issues that we're seeing in the short term, how much weight do investors give that versus the optimism that we all share on these longer term things, which are way more impactful and much more just have much more potential to really drive the stock and the financial performance going forward. So I'm hoping we get a little bit of color on some of those product type things, but being that it is an earnings call, Elon doesn't really like to go too deep into some of those details. But I hope we do hear at least something on bot and FSD.
Yeah, can I ask a question to the panel? So do you guys first agree that, the most important thing that happens in these earnings calls is what Elon says and how he behaves and how his mood is? If you agree with that or don't agree with that, then secondly, do you think that he's going to be the gloomy Elon? He'll still be projecting recession coming. He'll be warning about, further investments and so forth. Or do you think we might get a realistic Elon, talking about all the movements that the company's making, the progress they're doing, being proud of all the achievements they've made? And then Vaibhav Taneja is a new CFO. The last time he was on, felt like the executives interrupted him quite a bit. Are they going to give him more chance, or it's going to be an Elon show all along? Do you think he's going to be a happier Elon, maybe?
I mean, I think. Go ahead, Yasha. You can go if you like. No. How about this? You move your mouth and I'll talk. No,
isn't that what happens all the time? Yeah, that's what's going on.
Yeah, never. Even though we look kind of similar. What was I going to say? The mood definitely impacts the stock movements, I believe. So, I think we've seen multiple times where the stock will be behaving a certain way after the earnings drop, and then all of a sudden Elon gets on the call, and then we have depressed Elon or gloomy Elon, and then you can just see the stock react to it after hours, and it usually there's a hangover in the next day as well. But I think those things are just, again, short term. I think over time, macro and the overall story for Tesla stock will be the things that really drive the story here. Even if Elon decides to take a gloomy note during the call, I mean, what can we do? I mean, the company clearly is still very much being run by him, and I think how he feels will be sort of put on his mood will be driven to the market, and we just have to watch and see what it does based on that. That's my opinion. I could be wrong, but that's how I'm thinking about it.
And let's not forget that he just got back from Auschwitz, so may be a bit of a gloomy, emotional kind of Elon for that reason. I don't want to be kind of too flippant with anything around that, because it's obviously very serious, and I'd encourage anyone who can to go and visit. But that just doesn't set up the tone, I think, for a happy-go-lucky kind of Elon, which is, I think, when the stock tends to perform the best. But I think it's important to keep in mind, whatever Elon's mood is, has nothing to do with the fundamentals of the company. So that may create some noise around the short term, but really, I think what we need to be doing is focusing on the long term, and how are these most important programs that Tesla's really working at, how are those progressing? It's going to be a lot more important than Elon's mood.
Mm-hmm. I agree. Now, one thing I want to say is I really wish the CFO has a mic on this earnings call. I swear, I don't know what it is. Tesla's a tech company, but last earnings call, you could barely hear the guy. So I really want to give him another chance, and I hope, for the love of God, someone gets this guy a mic. But FSD, Farzad, you talked about everyone focused on the short term, what's Elon's mood, like earnings, margins. I think margins matter. I mean, I don't think there's any way around that. This earnings call, I think the sentiment for the stock price in the next couple of weeks is going to be based on the margin and what Tesla guides for this year. But again, maybe I'm harping on it too much, but I'm the guy that usually is like, FSD is years and years away. Who knows where this is going to come? But I want Tesla to really speak to how close they might be to really solving full self-driving, at least in the limited use case where they can have a pilot case going somewhere in North America. Because if this is really, obviously it is, end-to-end neural nets, I mean, we could specialize hyper locate into a specific part of San Francisco and start a fleet. Tesla really could at the end of the day, and really like just a stone's throw away from it. So I think this is an earnings call where the medium term stuff really comes into the shorter term perspective. And I think FSD in the timeline there speaks to that. And then one other thing I want to say is the leak yesterday from Reuters about the $25,000 model. Really interesting timing. Whether or not it even catches us by surprise as people that follow Tesla is not really. I mean, we've been talking about it since 2021 now at this point. But the leak timing was very interesting to me, and I'll kind of leave it open-ended for you guys.
Yeah. Real quick, Emmett, if you wanted to jump on anything.
Can you still hear me okay?
We lost
bringing
you.
something in. Can you hear me?
I can hear you, but I can't see you.
Okay, let me just turn it on, make sure it works okay when I bring this to you. Hold on 1 second.
Oh, boy.
1 second.
He's taking the shirt off, I think.
Emmett has a surprise for us, everyone. He told us before the stream he has a surprise.
Can you see behind me?
Whoa!
Can you see?
Oh, wow. Look at that.
Dude, you got
I got mine yesterday. Yeah.
No way.
Farzad, I just sent you a 1-minute video of me surprising my kids at their school, picking it up.
Oh my
gosh. Everyone went crazy. All the kids were like chanting Cybertruck, Cybertruck.
That
All
is
the
so
parents are like,
sick.
what the heck is that thing?
Wow.
Awesome.
Congratulations, buddy. That's
I got my call
amazing.
Monday. Yeah, they called me Monday. Like, yeah, we got your Cybertruck. You can come pick it up any day this week. And I was like, I'll pick it up tomorrow. And
What did you
put it
get?
down low? Just the foundation. The only one they offer right now is the foundation series with everything loaded on it. So that's what I got. The dual motor.
Here, let me share my screen here so we can see this thing.
Check
in
out this
action.
video. This reaction. You got to turn the volume up.
I gotta tell you right away, Emmett, brother, you gotta shoot horizontal, bro. Come on, what are you doing?
My wife is videoing. We planned it. She's videoing it while I'm driving up. All right.
Can you hear it?
No.
Okay, hold on. See,
No,
I'm over here.
You gotta hit
criticizing you. I
window
don't
share
even
with
know.
audio. You got it.
Thank you.
Like the kids have no idea this is coming. My wife's just videoing it. They're like sitting down while all the kids are driving up.
My
Can you
language
hear
is
that?
Hey, love bugs, what do you guys see turning in over there? It is. Oh my gosh, it's Dad. It's Dad.
One more second. The Cybertruck drives up.
We got you good. I wanted to surprise you.
That's awesome.
All right, let's go. Let's go.
There it is. There's a triangle. Dude, that's awesome. That is sick. That is sick. I love how you're driving a car from the future and your phone resolution is from like 1998.
Well, my wife filmed it, and then she sent it to me on a text, so the quality's bad.
Compressed, yeah.
Yeah, that looked like it was shot on a potato. But you know what? You don't see people. When will you ever see someone cheering like that for the Chevy Bolt? I'm just going to throw that out there.
It's very true.
Chevy Bolt.
So how? Okay, so let's discuss that a little bit later. I want to make sure Jeff gets his thoughts in. Congratulations, that's freaking awesome. That's awesome. I have a lot of questions.
That is awesome. Congrats. I love it. I can't wait to get mine. I just think, just quickly back to Herbert's question. I think his mood's important. I think it does shift and kind of move sentiment on the stock. But again, I think the institutions are going to be looking at the numbers. They're going to be looking at auto gross margins. They're going to be looking for some sort of forecast around, deliveries for the year. And if those disappoint, I think those could weigh. Or if they're in line, I think it could go fine. In terms of the third thing I would like to say is, since the last earnings calls, you have to look at what Tesla is actually doing versus what, sometimes some of the things that are said. What's happened since the last call is they've really uncorked all the factory expansions and got them underway. If you see what's going on in Nevada, you see what's going on, with Mexico, you see they've really got this process going and accelerated. If you look at all the different hiring that's going on and all the job postings, Alexander's been posting those. I mean, there's tons of them, and they're pretty deep in terms of numbers, and they're pretty wide in terms of span, which means they've uncorked hiring. If you look at what Tesla did back in the summer of 2022, before a lot of this started, they were the first to start doing RIFs, and they were really kind of clamping down in certain areas, and now they've really kind of opened it up. So, I mean, if I were an analyst, that'd be one of the questions I would be saying. Like, it appears like you're really opening it up from a CapEx perspective in auto, from Dojo, from what you're doing with all the hirings and postings. So if the rhetoric or the mood doesn't match what they're actually doing, if there's comments on macro, then I kind of have to wonder, like, what's really going on. But their actions are very expansionary in nature.
Any other thoughts there, based on Herbert's question? Yes? No? Okay. Cool. So we're about 5 minutes away from market close. Once market closes, we'll review Tesla's earnings and we'll talk about what we see. We'll analyze on the fly. We'll also analyze all the way through the call, through the earnings drop up until the call for about an hour and a half. And then once the call happens, which will be, 4:30 Central PM and then 5:30 PM Eastern, we'll also air the call on here as well, the earnings call from Tesla directly. And then we'll discuss afterwards as well. We'll take some notes and we'll share those with all of you real quick. So before the earnings drop, I do want to give a quick shout out here before we start talking about what we would expect here in the next 5 minutes. I don't know if you notice, but I got some guns now, y'all. Why is that? Because my buddy Brandon has started a business called Evolve Performance Coaching. If you don't mind, let me see if I can do this from here. Make sure you go check him out. He uses scientific-backed approaches for nutrition and fitness. He's been helping me a lot. I'm one of the laziest people on earth when it comes to working out. And make sure, actually in general, and just so make sure when you do sign up or you request a quote, make sure you tell him that Farzad sent you and he'll give you an awesome discount on his services. He'll give you nutrition, he'll give you a workout regimen, and he'll work with you based on your schedule. And then maybe one day you can be not as fat as me, because I still have a long way to go. Like a long way to go.
What's
Maybe
the
one day
name
you
of-
look like Emmett.
What's the name of the service again?
The Emmett is, the Emmett. The name is teamevolveperformance.com. And I'll put a link to that in the comment section below.
Come back to me, Farzad, when you have your photo on that website.
Will do.
What is that going to be like a year from now or maybe 2 months from now? Or?
We'll see. I'm going to be
You
eating
have
a
a
lot of
baby
protein.
coming, right?
That's why I'm doing it. Yeah, that's why I'm doing it. Yeah. So thank you all very much. Make sure you go give him a shout out. Farzad's juicing. Orange juice, maybe.
Is it like a combination of like fitness and nutrition protocols?
Yeah.
Is it sort of, okay.
It's
Cool.
a combination, and he'll work with you. So he'll work with your schedule. He'll work with everything. So your goals, and he'll customize everything for you. So check him out. Mention that you got the link from me, and then he'll hook you up. Thank you very much. Okay, 2 minutes to go until earnings. Do we have any guesses on non-GAAP EPS? Do we want to go around the horn and spit ours out? Is that a good idea? Yeah, maybe. I have 78 cents.
I already said mine. I'm at 65, so I'm on the low end.
Okay. Consensus is 73.
I'll throw out 70.
Okay. Herbert?
I'll defer to Matt, whatever Matt's is. I think it's more realistic.
I'm going to go with consensus. I can't see any reason why it's going to be way above or way below. It seems to be just right.
Jeff?
Go with 75 cents.
Hans?
I plead the fifth.
Wow. Terrible.
Can we actually quickly go around and just do, because I think the number that actually matters really is auto gross margin except credit. I'll start. I think 16.5 is my guess. And Wall Street, I think, is at 16 point. I think Wall Street is at 16.7. I don't know. Someone correct me if I'm wrong there. Something like that.
X7 lease?
Yes.
15.7 is what I saw.
Oh, 15.7. Okay.
Let me see what I got.
I know there's different consensuses, but the one I saw on CNBC, I took a screenshot today. It was Q4 estimate was 15.7.
Okay.
18.5.
Weird.
Oh.
18.5. I think the COGS reductions start kicking in earnest in Q4.
Okay.
Yeah. Can't wait to be wrong. Okay. Anybody else?
I was just doing the math. I'm at 15 even.
Okay.
Wow. Okay.
Or Matt.
Matt is a bear today. He's almost as bearish as Gerber.
I like it.
Man.
I like it. Market is officially closed.
Destroying the stock. Like, I don't want to have to sell, but sometimes you just have to sell. Like the guy went off the deep end. What do you want me to do?
Good one.
Matt, your impressions are actually legit, bro. I never want to give you a compliment, but I guess I have to. It's kind of a bummer. Okay. All right, so now we're waiting for the earnings to drop. We're just going to hit F5 all day until this thing drops. Let us know in the comment section below what your overall mood is. Are you excited? Are you nervous? Are you indifferent? Are you sitting on the edge of your seat? Do you think it's going to be a disaster? Do you think it's going to be good? In line? This one is, we're such nerds. Like, who else does this? You know what I'm saying? Who else gets together on a stream, hitting F5 for some numbers to drop, you know? Look at us nerds hanging out.
I'm just watching the tick by tick price on the 1 hour chart. That'll tell us when it comes out before that F5 does. So you see, when you see the volume spike up and the ticks and it goes up or down fast with some volume, then you know it came out on like Dow Jones news indices, you know, Newswire, which is a little faster. So we'll see how the stock starts reacting. I'll let you know. I'll give you a heads up when that starts moving.
Cool.
Yeah. Sometimes you even get those phantom volume bars though. You just never know with after hours. It can probably take 5 or 10 minutes. Now, I do have to jump off, but I'm going to leave you guys with this. The last 3 quarters, Tesla reports earnings has not been good for Tesla stock in that week following. So hopefully this one is a little bit different. Hopefully we get some pricing in already that we've seen for year to date on Tesla. But I mean, barring a really big news story on FSD or bot or something, I think it'll probably be a muted reaction, if not red, is my guess. And I'll kind of leave you guys with that. I'll watch the stream now. Thanks for everyone for having me.
Thank you, Josh.
Juju gang out.
Yeah. I mean, the sentiment is not very good going into this print. So because sentiment's already so low, I don't know what's going to happen. Even if the auto gross margins are 15%, it's possible the stock goes up, you know, just because sentiment, I don't know if it can get much lower than it is right now with institutions, it seems like.
Yeah,
I do find it
so many times. Go ahead, Farzad.
No, please go ahead.
I was just going to say there are so many times when like Tesla has had just like an absolute banger of an earnings report and the stock drops, or like vice versa. So it is so hard to kind of extrapolate what's going to happen on any earnings release. But yeah, I mean, Emmett is right that stock's been dropping for like a month straight now, pretty much.
Yeah.
So sentiment is certainly down, and so there's a question of even if it is a bad print.
Oh, it's going down now. Something. Let's see. It looks like now it's spiking all over the place. Up and down, up and down. So I feel like it came out. Now it's going back up a little bit. 208, 209. Let's see, 210. Wow. So it's looking good. It's going up. Let's see if it's like one of those V's where it goes up and then down though. 211, just about.
How much volume is coming through?
207. It's a good amount of volume. It's printing really fast. So it definitely came out on the Dow Jones Newswire. Takes about a minute sometimes, or a couple minutes to show up on
205 I'm seeing
now. 205. It just went back down. 205. It spiked down, up, and then back down. Something came out. Yeah, now it's back. It's jumping all over the place.
F5. Come on.
Maybe on Twitter someone already posted it. There's like automated things. Maybe let me check Twitter. Like the top line number.
I'll keep hitting
Bloomberg showing it. Bloomberg News is saying they released results. Yeah, Bloomberg News is already trying to talk about it. I don't have it on. It'll show up. I'm not listening.
Okay, looks like we have here EPS 227, Tesla 4 quarter adjusted EPS 71 cents.
Does it say gross margin?
We don't have gross margin in here.
204 now. 203. No, it's going back down now.
Okay, here we go.
I mean, adjusted EPS of 71 cents is, that's the big number.
Gross margin 17.6.
Estimated was 18.1. It says, yeah, but is that ex regulatory credits?
Oh, I got the deck now.
Oh, I got it too.
201. Right, wow, it's going to break 200 soon. It looks like it might go down. It's $1 away.
Operating margins up to 8.2%. GAAP gross margin total is 17.6. Auto gross margin is
199.
Let me see. Well, clearly the market doesn't like it.
Sometimes it reverses. It's still early. It could reverse back in the next few minutes or half hour. You never know. We'll see. It's hard to. That's 197. It's going down though. Yeah. Initially.
Let me go ahead and try to do the math real quick.
Free cash flow of $4.4 billion. It's decent.
Energy revenues were actually down sequentially, which is really surprising. The lowest number for energy revenues that they've had all year, which is definitely cuts against the narrative.
Let me go ahead and read the highlights in the summary as maybe we'll look through some of the details in the back end. Let me go ahead and read the highlights. Profitability, $8.9 billion of GAAP operating income in 2023, $2.1 billion in Q4. $15 billion GAAP net income in 2023, $7.9 billion in Q4. $10.9 billion non-GAAP net income in 2023, $2.5 billion in Q4. One-time non-cash tax benefit of $5.9 billion recorded in Q4 for the release of valuation allowance on certain deferred tax assets. I don't know if anybody knows what that is. Maybe we'll dig that one deeper.
That's the thing James Stevenson's been projecting for like 2 years straight.
Okay.
So it's not a big deal. It's only an accounting issue. It's not a cash issue.
Okay. Cash flow of $13.3 billion, free cash flow of $4.4 billion in 2023, operating cash flow of $4.4 billion, free cash flow of $2.1 billion in Q4. That's a pretty good number. $3.0 billion increase in our cash and investments in Q4 to $29.1. So they've increased their cash reserves. Model Y became the best-selling vehicle in the world. Energy storage deployment up 125% year over year. In 2023, we delivered over 1.2 million Model Ys, making it the best-selling vehicle of any kind globally. For a long time, many doubted the viability of EVs. Today, the best-selling vehicle on the planet is an EV. Free cash flow remains strong at $4.4 billion in 2023, even as we focus on future growth projects with their highest capital expenditures and R&D expenses in company history, research and development. Energy storage deployments reached 14 gigawatt hours in 2023, more than double compared to the previous year. While energy generation and storage businesses profits nearly quadruple in 2023, gross profit of our service and other businesses increased from a negative 500 million loss in 2019 to a negative 500 or about a $500 million loss to about a $500 million profit in 2023. Cost of goods sold per vehicle declined sequentially in Q4. Our team remains focused on growing our output. I'm curious by how much that dropped. In late December,
we started 36,000 now. It was 37 and a bit. Jeff, it's fallen to 36,000.
Okay. In late December, we started rolling out V12 of FSD beta. Here we got Nick. Welcome, Nick. Trained on data from a fleet of over 1 million vehicles. This system uses AI to influence vehicle controls. Instead of hard coding every driving behavior, V12 marks a new era and path to autonomy. We're focused on bringing the next generation platform to market as quickly as we can, with a plan to start production at Gigafactory, Texas. This platform will revolutionize how vehicles are manufactured. I believe this is the first time they've explicitly called out the next generation vehicle on an earnings deck. Correct me if I'm wrong. Okay. Anybody have any highlights on the report as I dig through this?
Yeah, I usually go right to the outlook. And in outlook, I think the most important sentence is the volume. It says in 2024, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023 as our teams work on the launch of the next generation vehicle at Gigafactory, Texas. Now, we sort of expected that, but I just think people don't like to see slowdown in growth, you know.
Is that the main driver? Because it does look like I'm just looking at it, right? The earnings per share is pretty well in line. It's 71 cents. EPS is 227 versus 59 cents estimated. Revenue is right on target. GAAP gross margin 17.6. So numbers wise, it looks okay. It must be just the outlook then.
Yeah, I think the growth slowing down is, but it's just for a year. We all know that, but like institutions are like, oh, 2024 is going to be a slower year, it's slowing down. You know, we all know it's going to grow a lot more after, but I just think institutions don't have that kind of 5-year mindset.
This line from profits is interesting. I want to highlight real quick. While we continue to execute on innovations to reduce the cost of manufacturing and operations, over time, we expect our hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits.
They've had that line in there for about a year now. That's standard language at this point.
Just reworded, or is it the exact same verbiage?
I think it's the exact same verbiage. Yeah. It's at least very close.
Okay. Let me look.
Stocks recovered a little bit, back to 202. That's good. Coming back up from like 195 almost.
202.
How about this? It says in 2024, Matt, it says the growth rate of deployments and revenue in our energy storage business should outpace the automotive business. I mean,
what slide is this?
Outlook, volume.
Okay. Oh, look, what the heck?
204.
The growth rate
It's going back.
is going to outpace the automotive business. That's, I mean,
I mean, but that's consistent with what Elon has said for a long time. So I'm not sure that that's that unique of a statement. Good, but I'm surprised that the energy revenue actually declined in Q4. That's a big surprise to me.
isn't it to be
Kind of wonder
supposed to be
what's going
lumpy
on
though,
there.
Matt? It's supposed to be lumpy. That's what they've been.
Yeah, but
warning.
it's the lumpy with an upward trend, and essentially they were at like 1.5 every quarter in 2023, and then they actually dipped. So their lowest quarter in 2023 was actually Q4. So it's it is kind of breaking that narrative a little bit. Now the overall trend is very clear. The demand for energy storage is like through the roof. So I'm not worried about it, but it's kind of surprising that it's not showing up in the numbers yet.
What do you think is the key reason why? Like why isn't it showing up?
I mean, it is lumpy. Like you can have one large project that's, I mean, there are some that are like 100 megawatt hours or some that are even bigger than that. And so if you just don't have, I mean, if you have maybe 8 big projects in a given quarter that you think are going to, close or get to whatever acceptance milestones are needed to recognize the revenue, and you just don't get there, then that project slides. And so it can just be way more lumpy than, vehicle sales, which, when you're selling 500,000 in a quarter, it's like the lumpiness is not as significant as when you're just selling a smaller, minute number of larger projects. And then on top of that, there are legitimate like milestones. So even if you're producing the mega packs out of Lathrop, you don't recognize all that revenue right up front. There are the milestones, and you need the grid to be energized to get to the last milestone. So some of it just does take time. So there's going to be a lag just inherently with energy, but you would expect the lag of production to show the overall trends for both deployments and for revenue to be upward. So it's just surprising to me that that's not the case.
Mm-hmm. Makes sense.
Do you guys think that because they missed like, I guess it's just slightly in all numbers, but the fact that they still miss, is that going to be bad, right? Because they're just going to position it that way.
I mean, I think we'll get a lot more color on the call, right? I mean, it's one of these things where we have to digest this deck. At first glance, I'm like, okay, kind of in line, a little bit under on EPS, a little bit under on gross margins, but the COGS reductions are clearly kicking in on the car side. They're being kind of like, vague with the next generation stuff as we expected them to be. And so it's kind of one of those like, okay, let's see what he says on the call. That's the kind of vibe I'm getting from this one.
What was the percent growth from 2022, 23? It was like 36% or something like that. From what was it, 1.4, 1.3
Units?
to 1.8? Yeah. What was the percent?
Yeah.
Because they're saying in 24 it's going to be a slower rate, so that's slower than that 36%, I guess. So we can kind of see what the maximum limit is. Probably that they're not giving a number out.
38% was the 2023 unit or the delivery growth.
So maybe 30% is the max, 20%, maybe 20 to 30% is what we're thinking. I don't know. What do you think they mean by that sentence in 2024? Our vehicle growth makes notably lower. Is that like 20 to 30% versus 38%, or is it like 10 to 20% versus 38%?
Yeah, I mean, at a 20%, you're looking at like just under 2.2 million vehicles, which kind of seems reasonable.
That's sort of what's in line, yeah. But is it 10%? Is notably lower? Is it 10%? That would be 2 million vehicles, or 1.98 million vehicles, right? That wouldn't be that much. That would be on the low end. So I'm wondering if they'll give out like a number or an actual percentage estimate on the call. They get asked about it.
Yeah, to me, it sounded like they're trying to prep for a 2.1 million year, 2 to 2.1. It's a kind of
ambiguity around that, like notably lower than the growth rate. It's sort of ambiguous.
They might give a target in Q1, like in their Q1 earnings. They'll be like, hey, we want to wait and see how Q1's going, and then we'll let you know what our target is for the year. Because I think that's what they did last year as well. They didn't give full guidance in the fourth quarter. They gave full guidance on the first quarter. If I remember correctly.
Because that's a big difference. Like if they say 2.2, 2.3 million, which is still notably lower than 38%, then maybe the stock recovers. But if somehow Wall Street thinks it's going to be like 2 million or below and it's only 10%, I think the stock could take a much bigger hit, because this is a growth stock. It's an automotive technology, conglomerate, but it's also a growth stock. And so if growth is slowing down a lot more than people expect, the stock takes a big hit. That's what happens with the growth stocks.
Yeah. Go ahead, Herbert.
Oh, I was just going to say that it wasn't, in order to hit the 50% growth or the 35% growth, what do they need to hit? 2.3? So it could just be at 2.2, it could be 2.1, right?
Mm-hmm. Yeah. Yeah. I'm hopeful. Yeah, I'm hopeful.
I'm entering some numbers in my spreadsheet here. What other observations are people seeing from the deck? What else are we seeing? Let me know in the comments section below too if you're what you're seeing from the earnings report. I'm reading through the comments here.
Yeah, I mean, the other thing that does stick out to me a little bit is you've got the full year adjusted EPS of $3.12, which is down 23% year over year. So, I mean, like Emmett, this isn't a surprise number to any of us, but I mean, to actually see it there kind of in writing, you see the amazing trajectory of, the EPS growth and the, revenue growth from 2019 all the way up to 2022. And then, the story just backslides on profitability in 2023. So this is, I think that line alone might give a decent amount of, fodder to the bears. And, just to kind of level set, I mean, with the stock at $200, Tesla's still trading at a PE of 64 against that number, that 312 figure. So, it's a pretty high earnings ratio for a company whose earnings are actually declining year over year. So like that's going to be the bear narrative that okay, you're priced at a 64, but your earnings are actually decreasing. Like how does that make any sense? So yeah, I could see a fair amount of momentum on that narrative.
Yeah, when I zoom out from a big picture, like I know Tesla, like all of us have conviction and know it's going to, like we believe that they're going to produce and deliver on the bot and full self-driving sometime this decade. And ultimately it's going to be a multi-trillion-dollar company. But as of right now, if you don't believe that, if you don't truly believe those things are manifesting with Tesla's technology, then you have to look at it and say, why is this above a 500 billion market cap? Like when its profitability is declined, PE 64, like maybe this should be like a 300 billion or 400 billion market cap. It's like, until they prove otherwise, and they have to prove it. They're saying all these things. You and I, all of us are watching closely the progress and all this stuff, and we see it, but it's not delivered yet. So I don't know. This year's, I think is going to be a tough year for the stock this year.
One thing I noticed is that the R&D and SG&A, R&D is down sequentially, and SG&A went up only by 30 million. So I don't know if that's, with the compact car and the bot in development, I'm wondering if that's like are you guys surprised to see that R&D is actually down sequentially, or is it just, is a lot of that going to go, or has that spend already done its job and now it's a matter of bringing it into real world? Let's go to Nick, because we haven't had Nick throwing his 2 cents yet. Go ahead, Nick. Hi.
Yeah. Hey guys.
Hi,
Pumpkin.
See everybody.
Like the haircut.
Thanks. Yeah, I think on that point, I think a lot of the upfront investment has been made. I know there's been a lot of talk around, H100 chips and all that, but there's a certain point where you make the purchases up front. Okay, well now we have to, get the servers into racks. We got to figure out how we're going to network everything. Okay, now everything's networking, right? How are we going to layer software over everything? Okay, and now we've done that. How do we bring that online? How do we actually start using that to train? How do we carve up the different resource compute resources into more module forms so different teams can start, calling on it, right? So I think there's a lot of legwork. It's not just you purchase it and then boom, it goes out and it's being used, right? There's so much legwork that goes into it. Tesla alone spent, the last quarter just trying to figure out how to get, that last purchase from NVIDIA online, right? Just like they had to re-architect all of that, right? It's not like it's just, plug and chug. So I think a lot of the R&D from that side, that really expensive side, has been made. And now it's about how do we actually install it and make it usable for our teams. But so that's what I see so far, but I'm still catching up to all of you guys on all these numbers.
Hi. I'm still plugging in my numbers. Welcome in, everybody.
I want to hear from Jeff.
Yeah, I was just going to say just some of the commentary I'm looking through, just trying to look at margins and everything, but just this commentary, I guess, to the investor crowd of like, we're between, we finished this where we've had this 3Y expansion and now we're between the next one, and they're kind of formally talking about the next vehicle. And then you have the leak last night about, even the timing of it. So, I mean, markets look ahead. We're only talking, literally, this vehicle launching another 4 or 5 quarters from now. I just don't know. I mean, how would you try to time it or get cute with it? I don't know. Because if this, I guess you want to be in front of that next growth wave, and then accompany with that next growth wave, there should be, meaningful progress or deals done on autonomy and licensing and so forth. And where would the bot be? It's just interesting how they're kind of positioning it as like, yep, this is kind of a gap time frame, but we're designing this vehicle. It's going to be half the cost of our current, lowest cost vehicles today. It's going to be pretty meaningful from a volume perspective. So it'd just be interesting, like, how would you even know how to time it or get cute of like when to get in or when to get out? So anyway, just interesting the way they position that.
I think what I'm starting to take away from this is that if you look at the auto gross margins, including lease, so we're at 16.6 and Q3 was 15.7. So auto gross margin excluding ZEV and lease is up 0.9%. Yet the stock seems to be reacting to, I don't know what, like I guess the growth outlook, right? So I'm not buying this whole thing that this auto gross margins was what people were looking for. To me, it just seems like I think trying to guess what the stock market is looking for when it respects to Tesla has been a tough thing to do in this market. I think it's just basically impossible, because it seems like anytime there is something that gets addressed and something else comes up, oh, well, no, we're actually concerned about the growth now. It's like, okay, so you were concerned about the gross margins, now you're concerned about the growth. Okay. It seemed pretty obvious that's where
growth,
we're going.
I mean, the growth,
Lower growth
is another, to me, growth is another word disguised as slowing down demand of existing products, or the demand is not growing, obviously, as fast as it was for the existing products at current prices. So to me, that's the elephant in the room. Are they going to keep lowering? And you have to read between the lines. They're probably going to keep lowering prices if they're going to try to ramp up, the growth of the current product lineup, unless the global macro economy really recovers fast and people have a lot more spending money suddenly, for them to sell, more than 2 million 3s and Ys primarily, they might have to cut prices again. I'm worried, and
I think there's nuance. Again, all the price cuts aren't created equal. They've gone trim level and regional, and they have sequential reduction in COGS, and it looks like their margins are improved. I'm interested to see this, gross margins ex ZEV credits. But it looks like there could be a decent story around margins. It looks like there's a very reassuring story around cash going to $29 billion. So what would investors be worried about from a balance sheet perspective if gross margins have troughed and or are improving, and their cash position just literally went up about 10% quarter on quarter? And they said we're working on this vehicle that's going to be half the cost of what we're shipping today. And by the way, we're way ahead of everybody who's shipping an EV today and making profitable vehicles 30 to 40K. I guess I know I understand, like when you make a comment around, or when they make a comment around, we're going to be between these growth waves, and this year's growth may be meaningfully lower, but they've also laid out what's coming right after that, and nobody else has laid out something that's coming right after that that's anywhere close to being a global vehicle. So I'm not trying to just polish this thing, but I see cash going up. I see margins stabilizing, and I see
margins
them
going up.
really talking about this upcoming vehicle that's kind of a game changer for them. It's literally gonna grow to the equivalent of their entire portfolio they're shipping today. So I think they're kind of painting that path for the future.
I agree. I mean, I'm in that boat with you. Like, I'm super excited about the future of Tesla, but I think for all the institutional investors out there, does the current margins and growth combined warrant a 65 PE. You know, like going back to what Matt was saying, like Ford and GM are like 6 PE. They're not really growing, obviously, right? But 6 versus 65, you know, like maybe at a 30 PE. So if the market cap gets cut in half, maybe the institution's like, oh, it's worth the risk. I'll keep investing in Tesla at a 300 billion valuation. You know what I mean? Right now it's a 65 PE, 700 billion valuation, 600 billion valuation. So, you know, it's just, you just have to keep in mind the magnitude of how big the company market cap valuation is right now, you know, versus what institutional investors, the eyes they look at this stuff with, right? Versus us, you know, we all see, I know we're all like long-term investors, so we're not worried, but for the next 1 year, the actual stock price itself, if you're worried about the next 1 year, which you shouldn't be, we shouldn't be if we're long-term investors, but we like to talk about it. But if we want to watch it and entertain ourselves why it's going down, maybe this is why.
Yeah, I would also say, you know, there's a lot of talk about the Magnificent Seven, and obviously Kramer booted Tesla out the other day.
Yeah.
But I would say that there is a nuance to be made in that I think the whole market's kind of had a sugar high on the Fed indicating 3 rate cuts, and the market has, you know, built in a lot of hopium into that, which is good and all. But the other Mag 6 aren't as impacted by rates the way Tesla is. And sure, true that we are going to go into rate cuts, but they haven't happened yet. And so it doesn't make sense for Tesla to be pricing that in until it happens. So really the Tesla we see this quarter and next quarter is going to be the same Tesla that we saw last quarter with the same issues when it comes to interest rates. And really that interest rate conversation has been the sugar high into the markets that I've seen. And so there is this little bit of Tesla doesn't get to play in that ball game because, well, they are interest rate dependent on their products that they sell. So that's just, I think, something that we're probably going to hear on this call. And I think that's a lot of, you know, the guidance pessimism that's built into this.
Yeah, I think it's becoming increasingly clear, in my opinion, that for not investment advice, not financial advice, this is just my brain. The only thing that's gonna make this stock go up is any significant material news around that next growth curve. It seems like so compact car and FSD, because I don't even think bot is gonna be it's going to do anything to this thing or energy, because I feel like people still view energy as a legacy type of business, which under Tesla's sort of umbrella very much isn't, in my opinion. It's not well understood. Not very many people are talking about it, if anyone. So I think that's, well, Matt doesn't count. Let's be real here. So, yeah, but I think the takeaway here is that it seems like this market just wants that next leg. They want that, okay, give me the thing you were promising for the last 6-7 years. And until then, I think it's going to be this like 150 to 300 range that we're going to be stuck in most likely. And for folks that are long-term minded, that are betting or, you know, are looking for the FSD and the bot to come to fruition, this might be a time for them to start looking. Not investment advice. I'm just talking about what might happen. And for those that think that, like you said, Mehmet, or somebody else said here, like if you don't believe that's going to happen, then, you know, this looks like a Ford. This looks like a Ford that is not growing nearly as much, and it's a boring car company, and it should never be valued as a tech stock.
Okay, well, this is what I was trying to say earlier, right? Which is it's an auto business, and so everything Emmett's saying, this is how, you know, other investors look at it. The PE ratio doesn't make sense given institutions, because the growth rate is what matters. Even though cost of goods have fallen significantly by $1,000, that is a massive drop, just like Jeff Lutz has been predicting, and nobody thought that was going to happen. Margins actually improved, just like Jeff Lutz was saying. Despite that, the outlook is what matters. And so what needs to happen is Tesla needs to change the narrative. Now, they were able to successfully do it, okay? In last year, I keep telling people, if you look at the Q1 of last year, the earnings call, 3 investment analysts asked 3 questions about Tesla being an energy company. The next quarter, 3 questions from institutional investors asking about FSD. This is the year that they need to talk about robotaxi and, robotics AI. So everything you said, Farzad, is dead on, right? And this is like, we cannot be trapped in the same boat that everyone else is, which is, oh, it's an auto business, and definitely the stock is going to be flat. They can change that if they just change the narrative. It's an AI company, a robot company. Now, people are going, oh, that's years and years away. There are things that they can do today and to change that. And I just had a space, and several people who are bears on Tesla because they don't love the electric vehicle market. They never bought into it. They're now buying Tesla because of bots. And just like you said, Farzad, so even though you're waiting for the bot to, like, this is going to be a bot company, I think there's ways that Tesla can start to change the narrative. And I think it's going to happen. So that's, I guess I don't want to sound hopium, but come on, there's many companies that are being tagged as an AI company now, and they're hopium. NVIDIA, of course, is all pure numbers here. There's revenue and earnings in their forecast, so they deserve it. But there's lots of other companies who don't have that, and yet they're being tagged as AI. Tesla deserves to be tagged that.
Well, I think in respects to Tesla, if I could just throw my sense here and I throw it back. Was it Jeff? I think was about to jump in here.
No worries. No worries.
I hear you that a narrative would change, but the way I viewed this story is that I feel like Tesla has a weird next level that they have to hit, which is to actually deliver on these things, because now it's transitioning. I think it's starting to transition in the eyes of the investor because of such a capital intensive business, from a fast growing EV startup to a call it a legacy automaker. I'm not saying this is the right way of looking at the car company, at the company. It's just how I think that's how it's viewed. So there's this constant pull to want to bring it back down to what they view as Earth, because people are not buying that is not just a car company. There's 1,000 different things going on around it, and there's no amount of narrative change that will change that, because I think Elon naturally will be over optimistic, which I like. I enjoy as a retail investor with a 10-year plus time horizon, because it gives me an opportunity to get in. But I think for the average investor, it works against him, because it's like, okay, cool, you are working on the bot. Let's see it in the numbers. Okay, cool, you're working on FSD. Let's see it on the numbers. And I think that's a dynamic. That's a dynamic with the stock. Elon could literally spend the next 1,000 days running a campaign to try and change the narrative on what this company does, and I don't think anybody would care, in my opinion. This comes down to the numbers.
Well, even the bulls, Farzad, to that point, like we're kind of have fatigue of Elon saying that FSD is going to be solved this year, and like, oh, it's going to be the greatest step change in asset value in history. Like, we've heard these things for so long, for so many years, that even people who believe it are like immune to it. And we're like, all right, just like show me some evidence that like you're actually progressing this way. So I think it's right for people to be a little bit agnostic about Elon saying
I'm not
this
saying it's
stuff.
wrong. Yeah.
So I think that's just the reality right now.
I think I think a lot of you are spot on with this, but I was thinking about it the other day. Back in the day when we were all early investors into Tesla, it was easy to do that because you could see the numbers, you could see the delivery growth, and you could see how it was happening and trending. But now it's all about AI. It's all about FSD. It's all about the bot. And I was thinking to myself, man, if I didn't have FSD, and if I wasn't driving it every single day, would I still have this conviction in something I can't see the numbers growing? I use FSD every single day so I can experience it, and I'm like, this is real. I see the evolution of it and all that, but it just makes you wonder, because you can't see FSD in the numbers, and if you don't have it, it's really hard to have conviction into it.
Yeah, I mean, if we think about the real big parabolic moves in Tesla over the years, the main ones were when you finally saw S really flow through to the bottom line, and you saw it in the numbers. And then again, after Model 3 production hell had completed and we started getting really close back to profitability, those are when those moves kicked off. And then, of course, there's kind of a big move associated with the S&P inclusion, which obviously Emmett slayed on. But those are like the three huge moves in the entire history of the company. And so while, we can look at the fundamentals of the things that are going to drive those moves over the long term, I mean, you really have to just be honest about where the market is going to assign and recognize value. if we're just looking historically at how those trends have played out.
Let me throw something else out.
Oh,
go ahead,
Herbert. Okay,
No,
I was Hans is spot on that. I think the market, the market is always right. You have to understand that, and we can believe Tesla should be a $300 stock or $1 trillion company. It doesn't matter. The market is right. That's the rules of the game, and so you have to change our own thinking to understand how the market's pricing it right now and how it's going down and might go further down. And so we just have to be realistic and realize we have biases. Long term, I think we're very likely to be right, but in the medium term, this reminds me of kind of waiting for this Model 3 to get unveiled. Everyone knew the Model 3 was coming, and it was like so exciting. We're like, the stock should be much higher. The Model 3 doesn't the market know it, but it's prove it, deliver it, show it. And not until they actually start producing Model 3s, not after they start producing, they had to produce them profitably, did the stock really take off. So it has to take it's a deliverable. Tesla has to, and I think the dark horse here that I'm looking to most maybe this year that could save us later this year, and I want to ask Matt's opinion on this, is the Megapack factory in China. Giga Shanghai saved us big time. Chinese work ethic, they're amazing, they're incredible. Tesla China is, to me, responsible for more than half of the valuation of Tesla right now. And I think people need to really, we don't understand what's going on there enough. If we're, big time Tesla investors, we should really be focused a lot more than we can be right now, than we are right now in Tesla China. But the Megapack factory in China, I think that comes in line this summer or something, right, Matt? Have you looked at it much? What do you think to me, an optimistic estimate for Megapack China is probably in line. I think the Tesla China over delivers every time and again. They're amazing. So what's your most optimistic projection for Tesla China Megapack? Have you thought about that, Matt?
Yeah, I think it's actually more of a 2025 catalyst, unfortunately. So that would kind of play into the whole 2025 is the start. So we don't actually know, but the kind of,
I thought it was this summer they were going to start producing it or something. No, they weren't going to start producing.
What I saw was Q4 of this year to start producing, and then there's actually the revenue lag on top of that. So that really I think will start to move the needle in 2025. But from what I've seen with Lathrop, though, Lathrop seems to be ramping much more significantly than if you just look at the deployment ramps or the deployments that are disclosed in the quarterly report, that's not a very impressive energy ramp. So I think they're actually producing a lot more, but just because of the lag for these projects and the interconnection and the revenue recognition milestones, it doesn't look like a real impressive story. So I think when you start putting together all the stuff that's going to be hitting in 2025, I'm actually getting really excited about that. But I don't see a whole lot of kind of short-term stuff that's going to drop to the bottom line in 2024, other than maybe the one that I think is potentially a bit of a big deal is the direct pay tax credits. So that might be a bit of a help, especially for moving customers to buy at the point of sale. So hopefully that'll help move things. I was actually kind of wondering, as I was just looking at this deferred tax recognition that they got of $5 billion in Q4. I was wondering if part of that was because they're going to be able to recognize directly some of these tax credits. I don't know the answer to that, but it is kind of interesting that they recognized it right before some of these changes that are happening in 2024.
Yeah,
I wanted to ask Matt a question real quick on so we know that the revenue recognition here in the United States and the interconnect and all that stuff has been kind of a drag for Lathrop ramp. Do you have any visibility on what the regulatory environment and revenue recognition for Megapacks delivered in China might be once the China Megapack factory gets up and going? Is that going to be the same, different, better, worse?
Yeah, that's a great question. So I'm clearly less knowledgeable about China, so take all that with a grain of salt. But the one thing I would say is that the revenue recognition is an accounting methodology specifically related to the milestones of the project. So they're going to have to use the same accounting for projects in China and in the United States, but those projects may have different revenue recognition milestones. So, for example, if a Chinese developer just wants to buy the Megapack directly, and then they'll handle all the installation and everything themselves, and it's basically just a transaction for equipment, then Tesla would be able to recognize all that up front. So I don't know if that's a more common approach in China than it is in the United States, but it could be the case that if more of those projects are, where like an EPC contractor, engineering, procurement, construction contractor is essentially just buying the equipment from Tesla, which is like the way a lot of residential solar developers will do that. They'll just buy a bunch of Tesla solar panels and power walls. So Tesla will recognize those sales immediately. And then whenever that company gets around to installing them, then they would recognize the revenue from that. But that company just essentially keeps it in inventory. So if the Chinese customers are doing more of that, then maybe Tesla could recognize the revenue a little bit more quickly. But overall, my expectation would be that it's somewhat similar, where you're going to have some deployments and like some testing milestones where you got to prove that the Megapack actually works. And like I'm sure there still are interconnections in China, because you can't just connect anything to the grid just because it's China. So that process probably looks a bit different, but I wouldn't expect it to be inherently different in terms of Tesla being able to recognize revenue more quickly.
I just wanted to clarify what I was saying a little bit earlier, and a few of you actually touched on it. Okay, so I follow the milestones, right? I've been publishing these milestone tables since Tesla's 2000 all the way to 2024, and then I took a look at every milestone that Tesla's ever done, and I compared it to the stock price movement. And you're right, nothing moves the stock except for earnings, real number earnings, and the step changes happen continuously, kind of like continuous rise in the stock for months on end. Once there's a big earnings, it shows up in earnings. So like what you said, a Model 3 finally got out of production hell. Model Y launches, and then it finally gets being sold. Absolutely, financials matter. But the other thing that can change it, by the way, no product demo ever moves it. No Elon tweet moves it, maybe for a day, and then it bounces back, and that's not really the thing, right? So I get what you're saying. 2024, if you look at just straight numbers, you look at the PE ratio, I get you. And I'm not debating you at all on that. That is absolutely correct that's the way. But when I talk about the narrative change, I believe that what can happen this year, and this is hopium, absolutely, a partnership. If a partnership happens, like what happened with Hertz, kind of solidifying Tesla's kind of lead in electric vehicles and the ability to grow the electric vehicle sale. And this year, what if there was a large OEM that partners with Tesla for the FSD? I actually am very doubt that will happen. Because I know that they announced that 6 months ago that there's this early discussions. But given what happened with the unions, given where the U.S. Auto manufacturers, who I think could be the most likely to partner, I just don't think it's going to happen. But if it does happen, it solidifies. What if an OEM who is suffering, they're out there talking about how they're delaying their plans, but they also know they need to move forward in these plans. And so the most likely thing would be an OEM partnering with Tesla, not just for FSD, but hardware, software, the 0.5 supply chain kind of partner. If that happens, this redefines what Tesla's role is in the market, not just my own sales and what I'm guiding to, but actually helping other car manufacturers do this as well. What if they partner with another, just to show that the bot is not just for Tesla, just like what is that company that just did it now? Figure just did it, where they partner with BMW. So, okay, a partnership, if that happens this year, then that could change the game. If nothing of that happens and we're just showing incremental improvement in bots and FSD, you're correct. None of this will matter. We're still an auto company for the next year.
But if I can push back on that a little bit. So it depends who the OEM is, right? If it's Ford, I don't think it does anything, because Ford is not selling that many EVs. Okay, so it boosts their sales by 0.2% or something. So I think the magnitude of the partnership is going to be very important. I still feel like the partnerships that do arise, the only partnership that's going to drive earnings for Tesla is going to be related to FSD, in my opinion. And I don't think that is going to get any credit until it shows up on the P&L, even if they announce partnerships. I think the it's good. What's good about the partnership angle is if you're a long-term investor, it's sort of like a proof of concept that says, okay, look, it's not just Tesla that's buying into this thing. It's these players. They're starting to say, yo, let's go ahead and hitch our ride with Tesla because we think they're going to get it, right? But I still feel like with the way the market has been behaving as it pertains to giving credit to Tesla for full self-driving and all these things, I still feel like even if these partnerships are announced, it's going to be a nothing burger. In my opinion, great for the long term and great for solidifying Tesla's lead. But from the perspective of a stock, I don't know why the stock would be excited about that.
I just want to jump in quickly.
Go ahead.
Yeah, sorry. As far as that, I get you. You're all right. Okay, I will lose this debate. I'm not trying to do anything otherwise. But I think if we look at Tesla, I guess what I'm trying to remind people here is that, okay, whenever an event like this happens, earnings, we're so negative. We're just, oh my God, can't you see what's on the table? In 2 weeks, in a month, the whole narrative, the whole sentiment can flip. The whole thing about Tesla is like there's highs and there's lows, and there's, as soon as you get excited, all of a sudden something banger hits like this. You know what I mean? So yes, you're right. You guys are all right. But it can change very quickly.
Who wants to? Oh, there you go.
I think. Oh, sorry. You go, Nick. And then I'll,
Yeah, I just had a question for the panel because I'm a little confused about, like, I understand Tesla's putting out their statement about 2024, but we're going into 2024 with the tax credit at point of sale. Likely, to your point, Emmett, they'll probably continue to cut prices for the vehicles as we move forward. All these other companies are pulling back on their EV sales, and yet EV adoption is growing year over year over year. So who else is going to fill that segment if it's not Tesla? Like it makes me like I struggle to rationalize both of those together. And I'm curious how you guys think about that.
I'm not sure I follow, Nick.
So Tesla's saying that we're likely not going to have as much growth in this next year, right? Meanwhile, you have all these factors that would make you think the opposite. Point of sale for the tax credit. All the other companies that are supposed to be creating EVs, well, they're not. They're pulling back. And we see year after year, adoption of EVs is going up. So someone has to fill that. And if Tesla's essentially in the West, the only player doing this, why wouldn't we see more growth?
I think that's a great question. I think if we look at Tesla's verbiage, this is my opinion. If we look at Tesla's verbiage on the earnings deck, sort of their focus on that Outlook page. No, it wasn't Outlook. It was the what was it? The highlight page. On the last section, if I can share my screen real quick. Let me see if I remember how to do work technology. Here we go. We are focused on bringing the next generation platform to market as quickly as we can with the plan to start production in Gigafactory Texas. This platform will revolutionize how vehicles are manufactured. And then there was some other line in here where they talked about I forget where they put it, but essentially the goal here is to drive prices lower. So maybe we need to take that as a signal that says, hey, I don't think magically we're going to get a different tune from Elon on this earnings call versus the other ones that was interest rates matter. Interest rates are keeping our cars from truly being as affordable as we want them to. So we're going to continue to drop prices. And I think there might be something to be said around maybe there is more of a hesitant tone going into 2024, because I don't know how you guys feel about this, but the more people I talk to, the more people I hear, yeah, it's kind of getting tough out there. I don't know if you guys are hearing that. This is completely anecdotal. So it might be a reflection that says, hey, we think the economy is not going to be in that good of a shape. Yeah, we're going to be able to sell 2.2 million cars at, at 45 or 44 ASP, whatever that number is, average selling price. But that market still can only get us to 2.2 to 2.3 million cars at a complete maximum in 2024 with the amount of factories we've built, with the countries that we're in, with the amount of demand that's out there for the cars, and our hesitancy to advertise. Okay? So, and I'm wondering if this is all just saying, hey, we are planning we are betting on the compact car to come in and filling that gap. And just wait a year. We're working on it. We don't want to work on the compact car and expand production for the Y and the 3. Let us work on this thing. We'll figure out how to get out there as soon as possible, and then you'll see the doors come off. And as Cybertruck ramps as well, you think about having essentially a car in every segment now for the company, and that's what's going to allow the car company to go into that, that filling that gap where the rest of the EV makers are not making as much. So I think that there's a lot of validity to what you're saying, Nick. Like, I think if the economy was growing and EV adoption was continuing, then one would say if they're stopped not selling as many, then that in theory means Tesla is selling more. But I think maybe the thought process here is, hey, we just think that we think 2024 is going to be rough. I don't know. I'm obviously going to be wrong here, but that's how I'm thinking about it.
Yeah, I wouldn't necessarily. By the way, I've been saying the same thing that Nick's been saying for a while. Just look at where EV adoption is going. You put a band around it. You don't pick the best number. You don't pick the worst number. You kind of look at the range. And for whatever reason, we can't count cars in this country or in other countries, but you see different numbers of 8% EV adoption last year to 9% EV adoption, as reported by major institutions like S&P Mobility, for example. And they're forecasting, for example, for it to go from 9 to 13.2%. So let's say you don't believe it. Say it's going to 12%. Still, that growth, call it that 30 some percent growth. It's correct to assume that others, not only have they not taken their capacity up, they actually have motivation to not increase their capacity and to not increase output. Capacity and output are two different things, and people need to be very clear on this. There is no terminal rate on gross margins that allows a Ford or a GM to make money on their EVs today. So if they 3x their volume or 4x their volume, they've done the math internally and they know they have broken unit economics, and therefore they're like, we're not going to even try. That's why you saw Ford do 2 cuts in output. They're actually moving people off of shifts. They did 2 cuts in 5 weeks. So it's not that just people don't want EVs. That growth is going to go from 70% maybe in adoption, and talking about the US only right now, 70% down to, okay, maybe it's 40, maybe it's 30, maybe it's 25%. What other businesses besides H100s with NVIDIA are growing, greater than 25%? So I think you've got to look at things in context and try to understand where this is. I wouldn't fight the Tesla rhetoric on volume growth, but I would look to the cash position from a balance sheet perspective. I would look for them troughing gross margins. And again, that 3.5% COGS reduction quarter on quarter, that is stout. That is industry leading. That is extremely difficult to do. And we'll go and we'll piece, they said that they've actually taken reductions on all their models, but we'll see how much of it's mix related, how much of it's raw COGS related per vehicle. But that is undeniable. So what they've done, and I think in gross margins, I think what they've done in cash, and I wouldn't fight so much what they're saying on volumes, but there are things out there that say, hey, others have pulled back. The spiffs have gotten amazing. 6.5 or 7 out of 10 of every vehicles they sell is a Model Y, and that gets a tax credit in North America, and a lot of people qualify for that. So I think they don't know how it's going to go, and therefore they're taking a little bit more of a conservative path, and they painted this point of like, hey, we're between these two peaks, and we're kind of riding up to the next peak. You see the leak from Reuters, and then now you see them talking about it in their earnings release. So I think it's all kind of starting to get packaged together. And if you've got markets look forward, I don't know if they look exactly in 12-month increments, January to December 31st. I think they look a little bit further ahead, and not many, many years, but at least into the early part of next year, already 4 quarters away from that vehicle starting ramp up. So, I think there's a lot to unpack here. I wouldn't fight them on the volumes, but I am pleased. I think they drew a line in the sand on gross margins, and for now. And I by the way, just to be very clear, they will continue cutting prices, but they're going to do it in concert with their COGS reduction program. And I think that's a switch that got flipped on in the last quarter.
positioned itself very nicely, and my dogs agree, to really, I can't even think. They're very well sandbagged. If there was a tide shift here in 2024, I think we'll find out if this is a sandbag or if this is actually ensuring that investors have the proper expectations, and they're not trying to overpromise anymore. They're just trying to say, okay, this is what's going to happen. Just listen to us. We got it. We'll find out by the end of this year if this is what kind of learning lesson this is for the company, especially as a more mature, seasoned company in this arena that still has a bunch of startups going on. So there might be a hint of that as well. And the reason why I say that is if I think back, and this is just like psychology more than investing advice, which sometimes I wonder what the difference is. I don't think it's a science per se, but I'm happy to debate that. When the Model Y was announced back in 2019, that was the most sandbag thing Tesla ever did. It was, it'll come out at some point in the future. The unveil was super subdued. They barely were talking about it. And then it arrived 6 months early, and it blew the market wide open for Tesla. And they were able to sell 1.2 million this year. So some of this kind of gives me a similar vibe, where maybe they're learning they're kind of going back to that mode where they're like, okay, we're working on compact car. We know this thing's going to do 5 million per year at full ramp. We know everyone's going to be tripping over themselves to buy it. We know Cybertruck has incredible demand, and this thing's going to be, it's going to sell itself for years on end. We know we have the best EV on the road with the Model Y. Let's just use that to our advantage. Keep collecting cash. We'll lower the expectations, and then once V12 is ready to go, then the whole thing blows wide open. From a strategy perspective, that sounds right, but again, these guys are they know better than any of us combined. So, but that's how I'm thinking about the story right now.
I mean, one of the things that it really causes me to question is, what are the margins going forward, and what are the prices going to be? That if Nick is right, and we do kind of see a lack of competent supply from other manufacturers besides Tesla to fill that demand, especially if we get some rate cuts and the interest rates drop, it could be that Tesla's not really going to be growing supply at the same rate that demand is going to be growing in 2024. And that because of that, we actually get price increases instead of price cuts. If that's where the demand is, especially like Jeff said, with the amount of the fleet that is sold that is Model Ys, and with that being eligible for the point of sale tax credit, and we've seen all of the Cybertruck shows or showcases that have been in all the stores, that those are drawing in a lot of attention, a lot of foot traffic to the stores. And I think there's probably going to be quite a few people that are coming in to look at a Cybertruck and then walking out with an incredible Model Y that they had no idea was so affordable. And so I don't know, like I'm not saying that I think that there will be price increases, but I definitely think that it's a lot more feasible this year than people might expect.
And to add to that, days of inventory declined Q4 from Q3.
Yeah, good point.
So that
was interesting.
This is a machine that is ripping. You look at other auto, and again, sometimes we compare ourselves to other auto, and they got single digit P's, got it. But I think there's two different things happening. I think there's a macro auto picture of ICE. ICE vehicles are essentially have negative, like in North America, they have negative growth planned next year. That's the forecast in the SAR. And you've got inventory starting to pile up. And I think you have this macro ICE issue, and you have this legacy EV issue, 114 days of a legacy EV supply, non-Tesla EV supply leaving 2023. And you have Tesla going from 16 to 15 days of inventory. Their days of sales went down too. I don't even think they have enough inventory in channel to match some of the sellout that they need to do. So it's interesting here. I think they have definitely they've gone to this little bit under promise, over commit mode. Again, I'm not saying that they're sandbagging. I think there are issues out there that have to be dealt with from a macro perspective. I don't think anybody knows, but if you look at this machine that's running, it's go from 16 to 15 days of inventory. I mean, this is unheard of. This is, by the way, this is end-to-end inventory. When you see the other auto inventory reports, that's dealer network only. That doesn't include their four wall. You have to go to their balance sheet to get their four wall, and it's terrible. So this means this all makes sense to me from when I look at the COGS reductions of 3.5%. They're moving material so fast through their system that when they come up with an idea or they put the screws down on a supplier, it gets into their supply chain, gets into their factory so quickly that they're able to actually reduce COGS at a rate that's faster than anybody else building vehicles. Quite frankly, this 3.5% is better than anybody that's building anything, that's complex at this point.
Jeff, I thought the comparison you made to NVIDIA was kind of interesting, and I wanted to unpack that a little bit. So maybe for those who aren't following the company as closely, NVIDIA has just been on an absolute rocket ship the last 12 months or so. It stocks up, 3x. It was under $200 before their Q1 report last year. That's one of the stocks that we own for our clients at Rebellion Air. But I think they're growing volumes in a similar manner to what Tesla is doing. But the big difference is they have pricing power right now because their product is in so much demand. And so you're seeing that their margins are actually increasing, coupled with the crazy volume growth that they're seeing. And so that's such a stark difference to what we were seeing in the Tesla story. And you can see, I forget who it was, Herbert. I think you were talking about what has actually moved the stock before when you were looking at all the historical examples, and it was always, okay, what drives to earnings? And so I think that the fact that the price cuts in the last year have eroded away all of the incremental earnings power that would have come from the increase in deliveries. That's why we're kind of in this rut that the stock has been in. So when we get out of this, I'm not sure, but I kind of like what you're saying, Jeff, about some of the demand could be increasing a little faster than the supply, and Hans as well. So I think that actually I hadn't heard it worded quite that way, but I could certainly see that playing out to some degree. I think we're all more or less saying 2024 it's not looking so great, but maybe it's not quite so bad in the short term as we might have been making it out to be.
I want to jump in if I can. So let's break this down, right? Because some people in the comments are saying, this is an auto company. It's an auto company. Don't you see the PE ratio? Don't you see the price? If I look at the institutional analysts, and quite a number of them, they show you the sum of the parts of what they think make up the $200 stock price that we have today. And the auto business is typically around $60 to $70 of that $200. They are already telling you that the stock price is already taken into consideration robo-taxis, the majority of this, of the rest of it, maybe a little bit AI. Because I keep saying, well, I don't think that they're considering that this is an AI company. This is still an auto company. But every time you say that, you'll take a look and you'll see these institutional analysts saying, I already built it in because I only see $70. So if this statement about notably lower than the growth platform, and therefore doesn't justify 60 or 80 PE ratio, but if it's only $67, shouldn't it just go down to, let's say, 60? You're talking about a $10 drop. So this drop could be an overreaction. I mean, I'm not a stock guy. I'm not going to go care about the ups and downs in the next month or two. But I'm just trying to piece together all the information I've got.
Real quick, I do want to hit on the topic of NVIDIA. I don't know if you guys saw this, but and we'll go back to you, Herbert, because I know you want to talk about something cool that you're working on. And then we're going to do something very special. We're going to have Elon himself give us some answers from the call.
Special guest.
Yes, special guest.
Is Zach Kirkhorn going to make a return? I don't know.
We'll see. Did you know Nancy Pelosi's options on NVIDIA calls have made her $700,000 in under 2 months? More than triple her annual salary of $223,000. The GOAT, Nancy Pelosi. Maybe we should get her on this podcast one of these days. What do you think about that?
People talk about Buffett all the time, but man, Nancy Pelosi is the legit GOAT.
The GOAT. The GOAT.
Yeah, I think Portnoy bought Tesla calls from March. I think 230, 240.
Oh boy.
Different track record. We'll see.
We're about to get a rant from him on X. Herbert, go ahead and talk to us about your special project.
Okay, yeah. No, thank you for doing that. I haven't actually done this before, but I do advertise a little bit on my YouTube channel sometimes that on TeslaInvestor.com, I've put together 15 modules that are, the resources that a Tesla investor would like. So just check that out. As you know, you also can get the free milestone tables. Just sign up for the newsletter and you'll get that. So if you're a Tesla investor and you want to know as much as you can about Tesla, just check out this website, TeslaInvestor.com. Thanks, guys.
What a professional. Damn, 10 out of 10. A lot better than my crappy thing that I did earlier. Sorry, Brandon. Maybe we'll get you one, hopefully.
Well, I have a question for you guys, real quick.
Yeah,
for the near term, I mean, we're clearly negative sentiment. It's gone from 250 down to 200 in the last month or so. A year ago, it got down to 100 and 120. It was like in a 120 range before it finally bounced back up aggressively to 200 plus in the spring, I think, or early summer. So at some point, we know, the stock's going to rebound. If it happens sooner than later, do you think, I think, Herbert, you were saying something's got to change the momentum of the stock. It can change quick in a couple of weeks and be way up. And I've seen that so many times too. What do you got? And I've talked to some, I put out some tweets trying to figure out when this Delaware court case is going to be settled, because it's been over a year. And it's like, we're in the dark. Could it be 5 years, 3 years? But this guy, David Taylor, you may have seen him from time to time on Twitter. He's, got a few thousand followers, but he said he's connected and he replied, he knows people in the Delaware court system, and it's most likely going to be settled in the next few weeks, which would be great. And do you think, I think once it's settled, I think almost ASAP, like almost a week or 2 weeks later, or as soon as the next board meeting happens, they'll confirm the next package for Elon, comp package, and go public with that. Do you think that could turn the stock momentum around if suddenly a month from now there's a new comp package announced for Elon and it's like, all right, when they get the 10 trillion or 8 trillion market cap, Elon gets this. Do you think something like that would turn, do you guys think that could turn the sentiment around on the stock, because it'll make investors think a little bigger again?
I mean, I think for maybe, but I still feel like the overarching story here, let me bring myself up here real quick. The overarching story here is I think results matter more than narrative. But I do, what's interesting about the comp package is that, and my assumption is this comp package will have very specific goals surrounding market cap, maybe revenue from FSD, maybe energy deployment, maybe bot creation, maybe number of robotaxis on the road, right? Robotaxi mouse. My God, we finally have a beautiful person on the panel. Jeez, this whole time we've been us 7 bozos. But I think that might change. It might make an impact. You're welcome. But I think I still feel like results is what's really going to change the thing here. I don't think the comp package will do anything, in my opinion.
Well, I think on this earnings call, Elon needs to come out and assert clarify what he meant, and kind of assert his commitment to the company. So I think that's important. I agree. Results matter, but there is a sentiment here. There's an issue that I think needs to be cleared up. I think it's out there. It's hard to really explain. If you look at the first set, a couple of weeks of trading days this year, if you look at the Magnificent Seven, they're basically up a percent or two to 20, 12% or more. In the case of NVIDIA, I think it's even higher. So it's hard to explain, like, why would Tesla be down this much, other than that there's something, again, record production, record deliveries. Obviously there's concerns, about the performance of the business, but, coming off of that P&D, it looks like, this issue and this sentiment it has been weighing on the stock. So I think it'll have some impact, but again, I'm not one of those that it's hard to really prescribe, like, well, this will do it, and this, this catalyst will do this, and this catalyst will do that on that day. I think it's really hard to prescribe. Even this after hours action, I think it's really hard to say, like, well, what is this? I mean, what are they ultimately reacting to? I think we can surmise some things, but I think it's really going to come down to the tone on the call, and do they actually forecast something meaningful, something that's not in the context of the actual earnings report? Is there a voiceover that's meaningful? I think it's what it's going to come down to.
Let's go ahead and bring in Alexandra. She just joined us. Thank you for joining us. What are your thoughts? Give it to us.
You don't mind that I sum
Give it
up
to
where I
us.
am. I didn't listen to any of what you've said so far. You know, I'm getting old. I'm doing this really slow, but let me sum up where I am. I actually think the positives by far outweigh this Q4 earnings. I like that they said we're positioning ourselves between the two growth waves of the Model 3Y and the next generation coming. So we're in this intermediate phase. You have to have the time to sit out 2024. And I know for those that have the feeling that 2022 and 2023 were already difficult to sit out, well, you're going to sit out one more. COGS are down to 36,000. Shout out to Jeff. He's been telling us for months that this is coming, and here we are. Auto gross margins now stabilizing at 17.2. That's good. Free cash flow was for me the biggest good surprise because I didn't expect much, yet we had actually 47% of the 2023 free cash flow now in the fourth quarter. We're back to 4.4 billion for the whole year. That's good. That's giving us our 29 billion of cash. That's actually putting in question what I've been calling for, that we need a capital raise soon. They are saying it very clearly. They think they can stem everything with what they have. All good to them. I mean, I'm always looking at the other Mag 5 because Amazon doesn't give their research and development numbers. So compared to them, I found research and development numbers from Tesla low. I know they are lean and mean. I love that, but I just want to make sure they have enough money for everything they want to do. Operating margin together with the auto gross margin have bottomed 8.2 now. We're up from the 7.6. Energy growth and profitability were great, but the accounting Q4 is choppy. We have Matt with us. He has been telling us for years, this is always difficult to see which quarter they come in. So there is something coming soon. The whole CapEx for 2023 was just short of the 9 billion they guided, 8.89. And with a clear mention that this is really going all to AI and research and development. Now, research and development in Q4 was 1.28 billion. So a total research and development was 5 billion. I mean, that is a good number. I'm not saying that's not good, but compare that, I'm doing that again, with the other Mag 5, that is really low. So just, hoping that it's lean and mean. 800 million FSD beta miles worldwide. That's great. And obviously the big elephant in the room, there's no clear guidance yet on 2024 volume growth, maybe notably lower than the growth rate we had in 23, which was 38%. Energy should outpace auto. That's a big statement. I mean, we'll see what that happens. And then, James not here, but maybe somebody else knows. What's this 5.9 billion one-time non-cash tax benefit? I mean, that is just crazy. 6 billion, here they are. Wish that would happen to my bank account from time to time. But I know it was non-cash, but still. So other than that, I thought it was really, encouraging to read. I'm not surprised that the stock hardly moves, but I mean, what can they do with that? They have confirmation on the couple of numbers that they were looking for. They don't have their guidance, so now it's all waiting for Elon. Did he take his vitamins today or did he not?
Thank you. That was such a perfect summary here. We also have Gary in the background, but Gary, I don't know if you can hear us, but you're gray on here, or actually blacked out. Gary Black is blacked out. Look at that, perfect. So I would see if you can restart your machine that you're using, Gary, and then we can bring you back in. Any questions from Alexandra before we bring in our very special guest, Elon Musk?
Yeah, quick question for Alexandra. I'm curious on what your take was on the outlook for volumes in 2024. How you interpreted that?
Well, I think they don't want to put a number in writing, right? So for me, this is at the moment rather negative. I would have liked a 2.2 or whatever, or I would have liked a certain percentage saying, okay, we'll match this year's 38% or whatever. But let's wait and see what he says. It just seems that they are a little bit stuck between a rock and a hard place. What is happening with interest rates? What is happening with our worldwide expansion? How long will it take until we have that next gen car? How quickly can we produce? I don't know whether you've seen that on Twitter. Somebody seems to know that the first 50,000 Cybertrucks will all be foundation models. So how quickly will they push those out? So there seems just to be so many question marks that they didn't want to be precise, which I don't like. And you know me, good old German lady. But I'm giving them the benefit of the doubt until we hear them later on.
I think it's well said.
Let me see. Gary, can you hear us?
I can.
Okay, we can't see you, but maybe actually this is perfect. Look at this, Gary Black in the black. I love it. Living up to your family name. What are your thoughts here, Gary?
Well, they didn't guide, and that's the reason the stock's down. The margins were better than people thought. You know, the gross margins came in at 17.2, and as Jeff said, if you look at I look at COGS per unit was down about 8.5% year to year, and ASP was down about 16%. So that's why you had auto gross margins come in better than people thought. The earnings number was 71, which that really doesn't matter because if you looked at other expense line, it was like about 3.5 cents of noise. I don't know what it was. They don't tell you, but so the real number is like 74, 75. But because they chose not to guide, that's why people are uncertain. I mean, that number could be, 2 million for this year, and it could be 2.4 million. And because they didn't guide, that's why people are pissing out the stock. So, and maybe they'll clarify that on the call. Hopefully, on the call they'll give some hints about what they're going to do with pricing this year. But Wall Street hates when companies have guided every year, and then this year they decided not to guide, and that's negative, obviously. And until I don't think the comp plan matters that much. I think it'll be in line with what was let's say the Delaware court rules that last time was fine. It'll be similar to last time. I don't think that really resolves anything. They've got to give guidance, so you can't just stop giving guidance because you think the economy is going to be uncertain. I mean, everybody who guides then continues to guide, and once you stop guiding, you're looked upon as being negative. So that's why the stock's down. Everything else was okay. I mean, the numbers were fine.
Okay. Did you remember to turn on the light in your room, by the way, Gary? Are you working in the dark there?
No, it's light in here. I don't know why it's not showing me up.
Okay. Gary, what's your thinking about other investment analysts? I saw Gene Munster come out and saying he was quite happy with the auto gross margins, and for him that was the most important number. What do you think the others? I know that the headlines is going to be the notably lower than the growth rate achieved in 2023. That's the mainstream media. What do you think the investment analysts will say?
Again, the numbers are good. I mean, auto gross margin was better than people thought. Bloomberg was 16.7, I think, and this was 17.2. I know facts that they were saying on CNBC was 15.7. So the margins came in better than people thought. The problem is they didn't guide, and there's no discussion about pricing, and there's no discussion about auto gross margins going forward. So hopefully on the call, they'll be a little bit more clear about where the volume goes. Remember, the street's at plus 21 for year over year, and last year was plus 38%. So, they don't have to give you much. They can just tell you that, it's going to be up about 20% or something. And then there has to be some hint about what pricing is going to look like for this year. Will they continue to take pricing down? Will auto gross margins stabilize? And so that's what you're going to hear from everybody. They're all going to talk about auto gross margins were good, but there was no guidance, and that's why the stock's down.
Okay, Gary, you saw the cost of goods fall by $1,000, right? So are you taking that into consideration? Huh?
Yeah, but that's not. Everybody can see that, though, Herbert. So I'm telling you, that's why auto gross margin came in at 17.2. Because cost of goods was down on a per unit basis, down 8.5%. That's a good thing. But if you're not guiding, that just tells you that maybe the numbers are worse than people think. If you look at Model Y inventories in the U.S., they're pretty high right now. One would think with a $7,500 off invoice credit, they should have some visibility about volumes. But when a company decides suddenly not to guide, that's always viewed as a negative. The knee-jerk reaction among institutions is sell and ask questions later. I'm telling you, if they decide to clarify their guidance on a conference call and say, well, we're going to be 2.2 or 2.1 or something, then the stock will go back up. But that auto gross margin was a good number. It's just they didn't guide for volumes. They didn't give any guidance.
I think one thing that's interesting about that, though, is that if I remember correctly, back in Q4 of 22, they didn't guide for 23 until Q1. If they're consistent with that, do you think that's going to change the story?
We could wait until the end of first quarter and see what they say. But, last year they guided at the end of fourth quarter. The year before, I think they guided the end of fourth quarter. I could be wrong, but when companies don't guide, investors assume the worst. It just calls into question, are they doing well or not? The two most important metrics in the whole P&L are volume and auto gross margin ex reg credits. And auto gross margin ex reg credits for fourth quarter was decent. To your point, COGS was down 8.5% year over year on a per unit basis. It was 36.3, but the average selling price is down 16.3. So, hopefully on the conference call, somebody will ask them about their pricing, outlook going forward, and they may not say anything. But, the street right now, I think for 2024 is about 17.7 for auto gross margins. So if, they give some sort of hint that says, they're not going to cut pricing that much more aggressively, that would be good. But the fact that they didn't guide for volume when they have in the past, that's a concern to people like me.
So a couple comments too. I agree with what Gary's saying on the guidance. This is Jeff, by the way, Gary. I think that 3.5% or so of COGS reduction quarter on quarter is almost unheard of. In both in
and
auto.
I look at year over year. I look at year over year.
No, I'm not. Yeah, I'm not done. So first off, the year on year performance is actually really good. It's very good. And if you start dissecting the recent price cuts, like you take the China one, for example, the Europe one, for example, if you do that aggregate across all their volume, it comes out to about 0.6% of MSRP, and they just printed 3.5% COGS reduction. So I think I forecast some more pricing reductions, but in line with their COGS reduction program, or they may even exceed it. The question isn't to come down to volumes. There is going to have to be a question on volumes. Are they going to be relatively flat and still printing good numbers? So they're utilizing their factory capacity, they're utilizing their supplier capacity. That's going to be key. The other thing I think will happen, I can talk about this probably on a whole separate show, is they use this statement about natural COGS reductions, and you do at some point, you do reach exhaustion in some of those things. And so, especially if volumes are flat. So then you have to introduce unnatural options. And maybe I'll talk about that when there's more time, but they have a lot of unnatural options in front of them to really put on a fabulous COGS reduction program, as they introduce the next vehicle. Because which of their suppliers are not going to want to get a shot? If you're a Tesla supplier on the Y, you ship a part on the highest volume vehicle in the world, you get the best fixed capital leverage, you get the best labor efficiency leverage ever. So you're going to do whatever you possibly can to get a slot onto the next vehicle. And that bake-off, that Reuters league, that's starting now. And so anyway, I think there's opportunities throughout the year for that. And that's how it actually works in real life. The other thing, they have out there is the bot. And I believe that is approaching some sort of design lock over the next year. It'll be a rolling design lock, but something that they can build more volume of. And same thing there, supplier selection, bake off, everybody wants a shot at that. So anyway, it's something for a longer broadcast, but I do think they use that term natural for a reason, because they have a lot of unnatural options. Finally, their inventory reduction, their DOI going to 15, coupled with the very high COGS reduction, that is a machine. That's not. They're not getting sloppy. That's not like like they're coming out of 2023 and inventory built up and gross margins did this, and they're not forecasting volume. They're running this machine on inventory and COGS reduction. It's literally a masterclass. So if anything, I think they're positioned well. It's a question about if they comment on volume guidance in any respect.
Unmute yourself.
Do we have special guest Elon showing up soon, or we got the call coming? I thought he was going to show up here before the conference call.
Gary, you're muted.
Hi. I agree with what you're saying, Jeff. I'm just saying the volume numbers are really important to investors, and unless they clarify it, stock's not going anywhere. I mean, it may not go down. I mean, it's down about 3%. It would have been up if they had just guided to where the street was, which is 2.2. It would have been up, a few percent, because to your point, the COGS number was good and everybody knew what the pricing number was. And so, when you see 17.2 auto gross margin and FactSet was at 15.7, that's a big beat, right? But they blew it, and I don't know why. I don't know why they didn't just give some sort of number just to provide, or even give a range, And so you already have, I read some analyst saying, well, the volume number is probably about 2 million for 24. Well, they don't know that. The company's not saying that, but this person, has taken it upon himself to impute that from the lack of saying anything. So I don't know. It's just disappointing because the quarter was actually not that bad,
Yeah, one thing I wanted to highlight also, if you just look at what they have in their stated production capacity in the deck, it's over 2.3 million vehicles. Now, if you back out Cybertruck, because that's ramping, whatever, you're still at 2.225 million, which is, I think, plenty of growth year over year. But they're basically saying they don't want to even guide to what they've got in capacity. So I think we're all sort of expecting them to produce less than their capacity, which is a bit of an odd situation for Tesla. So that's something that's a little bit different. And I wonder if people are kind of looking at that and doing that math also.
Okay.
Yeah, let's
go ahead, Jeff. Real quick.
It's a quick answer on that. The key on that is using roughly about 80% of that capacity. That's benchmark in the industry. And what Tesla does is they leave the year with a capacity number, then they slowly add capacity throughout the year. So that may change, that regimen may change that this year, to your point. But the key is they'll probably use less than that. But as long as it's 70% is actually really good from a utilization perspective. They can keep it above 80, they'll be in great shape. The rest of macro auto's in a much worse position when it comes to utilization. So, but hear your point.
We're having the call in 3 minutes, right?
Yeah. So the call starts in 3 minutes. Real quick, I want to bring in our special esteemed investor relations person. He's going to ask a question to our special guest, Elon Musk. So 2 minutes, 3 minutes, Emmett, please pose your question to Mr. Elon Musk here.
I didn't know I was playing Martin. I can't do Martin Viecha. Okay, I'll try.
Of course you are.
Okay. Next question comes from anonymous retail investor. Given that you moved the start of the next generation compact vehicle production to Austin, has the timeline improved so that we might see next generation platform vehicles in 2025? Elon?
Yeah, I don't know why people keep asking product related questions on the earnings call. We're not going to be announcing any new products, obviously, on an earnings call. So we'll save that for a more appropriate venue.
Okay.
And then the next question
please.
Take your vitamin.
Anonymous retail investor asks, what has been the barrier to ramping 4680 cells into the multi-million cells per week rate? And what do you expect to get there?
Yeah, I mean, in any production process, you're only going to go as fast as the worst part of your entire production process. So the barrier to ramping to millions of cells per week changes week to week and even day to day. So I don't know that there's one particular answer I can give you, but it is just, believe me, I know that line inside and out. I've spent all the time there, and it's just whack-a-mole with which part of your process sucks the most today, and then you whack that mole, and then you move on to the next piece of your process that sucks, and then you whack that mole, and eventually, if you whack enough moles, yes, the key to ramping is whacking moles. Not whacking them off because that'd be bad. We don't want to say that, but just whacking the moles until the production ramps, and eventually we'll get there. So, yeah, I mean, we had liners being an issue. We had the rolling out the film being an issue. But right now, I think we're actually in a reasonably strong spot. We seem to have hit the linear part of the S curve. So I think the rate of production increases is going to ramp pretty aggressively from here. But then, of course, we're going to hit an asymptote and we'll need to optimize again. So we're going to continue to get better. And we've actually
I ruined the last bit there. Sorry, Elon. My apologies. Please don't fire me. Okay.
I did fire you a couple years ago, which is why you're doing what you're doing now.
Yes. Boom! What a setup.
That
God
was
damn it.
beautiful.
That was
I
awesome.
can't believe we're ending this on that note. Damn it. All right. We'll make it happen, I guess. Okay. So the call is about to start. I'm just listening for it in the background. We're just waiting for them to come live. Once we go live, everybody in the panel, if you don't mind, mute your microphone, and then we'll listen to the call live together. Can you guys hear the music?
No.
You can't? Uh-oh.
No.
All right, 1 second. 1 second, please. And go. Okay, what about now? Okay, we got music now. My God, I don't like the gloomy nature of this music. It's usually more upbeat. Uh-oh. Is it a sign of things to come? Thank you, everybody, for joining us. We will be listening to the earnings call together here. We're just waiting for the folks at Tesla to go live. Actually, what I'm going to do is I'm going to share the tab, so then that way we don't have feedback in case people want to add their commentary. Please do confirm you can hear the music. Yes? Okay, perfect. So once they go live, we'll share the discussion, obviously. And then after the call, we will also have commentary. We'll be taking notes from the call as well. We'll be sharing those notes with you. And once they wrap up, we'll have a post-call discussion where all of us, whoever's left, whoever survives the next hour of God knows what will come up, we'll have a discussion on what we heard. We'll go through our notes, and then we'll see what ends up, where we end up. So, okay, let's do a quick poll: thumbs up or thumbs down? Thumbs up, good tone. Thumbs down, bad tone. What will be the tone of this call? Okay. All right. We have a little bit of everything. Okay. Nick and I copped out here, which is smart. Okay. Any last words before the call starts from the panel?
No more boneheaded questions. I want to hear something like that.
Well, if you hear something like that, the stock will be down 20%.
I want to hear when AI day is.
Do we think we'll hear Compact on the call?
I don't think we'll hear anything product related because he's going to do another speech in a week, remember, after the 10K. So I think any question on products will be, no, I'm going to tell that in a couple of days.
Okay. That's fair. In the comment section below, let us know what you expect from this call. Look, we're already getting thumbs up here. So we got a lot of thumbs up. We got a Shaka. Nice. Thumbs up, thumbs down. Thumbs up. Okay. We're kind of mixed. People are expecting different things here are happening. Okay, we're just waiting for the call here. Everybody that's joining us, it's usually they're on time. They're about 3 minutes late, so maybe they're hooking up their super improved audio gear, hopefully, for this call, if they have one. But we'll see what happens there. By the way, between all the different broadcasts, we have 8,300 people listening in live.
Wow.
8,300. We've been somewhere between 7,000 and 8,000 for most of the call.
When is there going to be some kind of software that lets you combine this into like a Twitter Spaces, so it's on Twitter Spaces, even if you don't have Twitter Spaces interaction? At least people who are watching.
It is.
X
Herbert's is streaming it on Twitter.
Yeah,
I didn't know
live
he's
on.
streaming it.
Welcome to Tesla's fourth.
Yeah. All right, we're live.
Q&A
Here we go.
webcast. My name is Martin Vieca, VP of Investor Relations, and I'm joined today by Elon Musk, Vaibhav Taneja, and a number of other executives. Our Q4 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you. So the Tesla team did an incredible job in 2023. We achieved record production and deliveries of over 1.8 million vehicles, in line with our official guidance. And in Q4, we were producing vehicles at an annualized run rate of almost 2 million cars a year. This was really a phenomenal achievement. Looking at just the Fremont factory alone, we made 560,000 cars. This is a record. In fact, it's the highest output automotive plant in North America. And people are often surprised that the highest output car factory in North America is in the San Francisco Bay Area. It's a little counterintuitive, perhaps. And it's really had an incredibly positive impact on that entire area. What would have been a rundown strip mall is the highest productivity car plant in the Americas. Think about that. It was derelict when we got it, and now it's the most productive plant in this entire part of the world. And it's enriched the community in so many different ways. It's really a gem. So I'm super proud of the people that work there. Model Y became the best-selling vehicle globally, as predicted. The best-selling vehicle of any kind, not just electric vehicles, with over 1.2 million units delivered. The energy storage business delivered nearly 15 gigawatt hours of batteries in 2023 compared to 6.5 gigawatt hours the year before. So tremendous year-over-year growth, triple digits. Yeah, I think we'll continue to see very strong growth in storage as predicted. I said for many years that the storage business would grow much faster than the car business, and it is doing that. Free cash flow remains strong at $4.4 billion in 2023 in spite of record spending on future projects. So we had record CapEx expenses as well as record R&D. This brings us to 2024. There's a lot to look forward to in 2024. Tesla is currently between two major growth waves. We're focused on making sure that our next growth wave, driven by next-gen vehicle, energy storage, full self-driving, and other projects, is executed as well as possible. For full self-driving, we've released version 12, which is a complete architectural rewrite compared to prior versions. This is end-to-end artificial intelligence. So another bitnets, basically photons in and controls out. And it really is quite a profound difference. This is currently just with employees and a few customers, but we will be rolling out to all customers in the US who request full self-driving in the weeks to come. That's over 400,000 vehicles in North America. So this is the first time AI is being used not just for object perception, but for path planning and vehicle controls. We replaced 330,000 lines of C++ code with neural nets. It's really quite remarkable. Sort of as a side note, I think Tesla is probably the most efficient company in the world for AI inference. Out of necessity, we've actually had to be extremely good at getting the most out of hardware, because hardware 3 at this point is several years old. So I think we're quite far ahead of any other company in the world in terms of AI inference efficiency, which is going to be a very important metric in the future in many arenas. So see, the new Model 3 is now available globally. So we did an updated Model 3. While the car looks similar, a lot of work has gone into the vehicle to make it better in every way. It is significantly quieter, more refined, better equipped, has longer range, and many other improvements. And I recommend taking it for a test drive. If you have not driven a Model 3 in a long time, you should really try the new one. So steady improvements. And we're very far along on our next generation low-cost vehicle. This is an earnings call, not a product announcement. So there'll no doubt be many questions that try to ask us about new products coming, but we reserve product announcements for product announcements, not earnings calls. So, but we're very excited about this, and this is really going to be profound, not just in its design of the vehicle itself, but in the design of the manufacturing system. This is a revolutionary manufacturing system, significant, far more advanced than any other automotive manufacturing system in the world, like by a significant margin. Several years ago, I said perhaps the most important competitive characteristic of Tesla in the future will be manufacturing technology, and you will really see that come to bear with our next-gen vehicle. The first manufacturing location for this will be at our Gigafactory and headquarters in Austin, Texas. And then we'll follow that up with other locations around the world. Probably the factory we'll build in Mexico will be second, and then we'll be looking to identify a third location, perhaps by the end of this year or early next, outside of North America. So, in conclusion, we had a great year with record production, record deliveries, and a strong free cash flow in spite of a very high interest rate environment. And we are focused on exciting new projects that will, I think, ultimately, if we execute on all these things, and it is very hard to do all these things, it's not a sure thing, but I do see a path where Tesla could one day be the most valuable company in the world. I do want to emphasize that is not an easy path, and a very difficult one, but it is now in the set of possible outcomes. And previously, I would not have thought it is in the set of possible outcomes. So, thank you again to all of our investors, our employees, and our suppliers for a strong year, and looking forward to a great 2024 and years to come. Thank you.
Thank you. And our CFO, Vaibhav, have some opening remarks as well.
Thanks, Martin. Good afternoon, everyone. As Elon mentioned, we had a record year in terms of both production and deliveries for our auto business, as well as record deployments in our energy business. This was achieved despite 2023 being a challenging year in terms of higher interest rates and higher inflation. Big thanks to our customer for being with us through this challenging period. I would also like to thank the whole Tesla team for their resolve and dedication throughout. In terms of 2023 financials, we ended the year with over $96 billion of revenue and generated $4.4 billion of free cash flow to end the year with over $29 billion of cash and investments on hand. Our 2023 GAAP net income was impacted by the recognition of one-time non-cash benefit of $5.9 billion from the release of valuation allowance on certain deferred tax assets. This was due to our recent history of sustained profitability and is similar to several other companies who have recently gone through a similar change in their accounting. Accordingly, starting with Q1, our book tax rate will now be more in line with other companies in the S&P 500. In our vehicle business, we continue to see improvements in our per unit cost despite us being in the early phase of Cybertruck ramp. As a result, our auto gross margin improved sequentially. That said, predicting auto gross margins is extremely challenging since there are many moving parts to this equation, some of which are out of our control, like the change in tariffs or local incentives, to name a few. While the teams are focused on cost reductions, we are approaching the limits within our current platforms. On the demand front, as promised, we made investments in digital campaigns in 2023. We fully appreciate the importance of customer education as we are still in a customer acquisition phase. Our data suggests that around 90% of our vehicle buyers in 2023 never owned a Tesla before. We are being creative in figuring out ways to bring in new customers and educate them about the benefits of owning a Tesla versus gas-powered vehicles. The key among them being total cost of ownership. This concept is mostly overlooked for just the upfront cost. We will be rigorous in evaluating our campaigns, curating the content, and optimizing spend accordingly to support the overall demand. There are two additional things I would like to mention as it relates to the US market. First, for customers who qualify for the IRA buyer credit, we now offer that as a point of sale benefit for Model Y, which means an immediate reduction of $7,500 at the time of purchase to the end customer. Secondly, we continue to offer very attractive lease rates for Model 3 and Y using our partner leasing program. Note that the sales under this program are recognized as upfront revenue and reported within automotive sales. Our energy storage business had another record year with deployments more than doubling and revenues increasing by more than 50%. This business is poised to again surpass our auto business in terms of growth rate in 2024. This has been in the works for quite some time, with us laying the foundation a few years back by building our mega factory in Lathrop. I would like to thank the whole Tesla Energy team for their efforts to make this a reality. Our services and others business also started contributing meaningfully to our results and our fleets as our fleet goes, as we expect the fleet-based revenues from supercharging, used cars, and services to continue to increase. For 2024, our focus is to continue growing our output, continuing our cost reduction efforts, and increasing investments in our future growth initiatives. Accordingly, we are currently expecting our capital expenditure for 2024 to be in excess of $10 billion. We believe this would be critical in helping us lay the foundation for the next phase of growth. Once again, I would like to thank everybody at Tesla, our investors, and our suppliers for being with us in this journey. We can open it up to questions, Martin.
Thank you. Let's go through investor questions. Question number one is from Michael. Given that you moved the start of the next generation compact vehicle production to Austin, has the timeline improved so that we might see the next generation platform vehicles in 2025?
I mean, I want certainly say things with that should be taken with a grain of salt. Since I'm often optimistic, with I don't want to blow your minds, but I'm often optimistic regarding time. But our current schedule says that we will start production towards the end of 2025, so sometime in the second half. That's just what our current schedule says. There's a lot of new technology, like a tremendous amount of new revolutionary manufacturing technology here. The reason I want to put this new revolutionary manufacturing line at Giga Texas was because we really need the engineers to be living on the line. This is not sort of a off the shelf, just works type of thing. It's just a lot easier for Tesla engineering to live on the line if it's in Austin versus elsewhere. So, but we are currently expecting to start production second half next year. That will be a challenging production ramp. Like I can emphasize, we'll be sleeping on the line practically. In fact, not practically, we will be. But I am confident that once it is going, it will be head and shoulders above any other manufacturing technology that exists anywhere in the world. It's next level. So it's always difficult to predict what that S-curve of manufacturing looks like. So it always starts off real slow, and then it grows exponentially. And predicting that intermediate S-curve is difficult, but so I don't know. It's hard to say what the unit volume would be next year. We're not going to make any predictions on that front, but it does seem quite likely that we will start production next year.
Thank you. The next question is from Michael again. What has been the barrier to ramping 4680 cells into multi-million cells per week rate, and when do you expect to get there? Drew?
Yeah, first, I just want to allay any concerns regarding 4680 limiting the Cybertruck ramp, because I've seen some people commenting about that. To date, 4680 production is ahead of the ramp with actually weeks of finished cell inventory. And the goal is to keep it that way, not only for Cyber, but for our future vehicle programs. And as Elon said, it is an S-curve here too. Like it's hard to predict these things, but I'm just describing our goals.
It's a hard problem. Like,
yeah,
there are entire companies where all they do is make battery cells. That's like all they do.
Indeed, okay. Indeed.
We do a lot of other things, and we've got a lot of breakthrough technologies that take time to figure out with 46. It's not just that it's a 46 millimeter diameter by 80 millimeter full cell. That's just the diameter. That's just the dimensions. Mm-hmm. There's a tremendous amount of new technology in the cell itself
and manufacturing technology.
Yes, exactly.
And just regarding what the team was able to do in Q4, Texas successfully swapped line 1 from the Model Y design of the cell to the Cybertruck design of the cell, which was the 10% cell energy increase I've mentioned before. And as with any major new product introduction, the factory and engineering teams collaborated to ensure quality of the new design and the process changes as their first priority. And now our focus returns to cost and production ramp in Q1. In terms of what we're doing, we're currently running one production line, one assembly line, using two assembly lines in addition for yield and rate improvement trials. And we have a fourth in commissioning, and 4 more will be installed starting in Q3 this year. So definitely this is a big year for ramping 4680.
But we also do want to emphasize that we also expect to ramp orders from our suppliers.
Yep.
So this is not about replacing our suppliers, it's about supplementing our suppliers.
Yes.
So we are very appreciative of our suppliers. Panasonic obviously is our longest supplier. They're an amazing company. We've got CATL, we've got LG, and BYD. Yeah.
Thank you. The next question is from Adam. Should retail shareholders be concerned that Elon has stated that he's uncomfortable expanding AI and robotics at Tesla if he doesn't have 25% of voting?
Yeah, I guess let me explain what my concern is here, which is that I see a path to creating an artificial intelligence and robotics juggernaut of truly immense capability and power. And my concern would be so little influence over the company at that stage that I could sort of be voted out by some sort of random shareholder advisory firm. We've had a lot of challenges with institutional shareholder services, ISS, I call them ISIS, and Glass Lewis, which there's a lot of activists that basically infiltrate those organizations and have, strange ideas about what should be done. So, so I want to have enough to be influential. Like if we could do a dual class stock, that would be ideal. I'm not looking for additional economics. I just want to be an effective steward of very powerful technology. The reason I just sort of roughly picked approximately 25% was that's not so much that I can control the company, even if I go bonkers. And if I'm like mad, then they can throw me out. But it's enough that I have a strong influence. That's what I'm aiming for, is a strong influence, but not control. There's some way to achieve that would be great.
Thank you. The next question is, what is your expectation for automotive gross margin ex regulatory credits for the full year?
Like I said in my opening remarks, we're focused on reducing the cost of our vehicles. This is very extensive and involved exercise whereby we look at not just the component cost down to the packaging used to get the materials to the production floor. Each element of the cost is scrutinized to optimize further. A few pennies saved at the subcomponent level, whether through engineering redesign or from many other things which I mentioned, leads to cost reduction. This is a constant exercise, and we just have to chase down every penny possible. We have a strong team which is hyper-focused on this. However, this is a very difficult thing to predict precisely because there are a lot.
We don't know. We don't have a crystal ball, so it's difficult for us to predict this with precision. If the interest rates come down quickly, I think margins will be good, and if they don't come down quickly, they won't be that good. Yeah. It's always important to remember that the vast majority of people buying a car is about the monthly payment. It's not that people don't want. We have tons of we have lots of people who want to buy a car but simply cannot afford it. And that as interest rates drop and that monthly payment drops, then they're able to afford it and they buy the car. It's pretty straightforward, and there are no tricks around to get around this.
Yeah. Okay, thank you. The next question is, does the company anticipate 50% volume CAGR to be realized in either 2024 or 2025? If not, why not?
As we've said in our prior guidance, there will be periods where we won't be growing at the same rate as before. We are between two major growth waves. The first one began with the global expansion of Model 3 and Y. And we believe the next one will be initiated with the next generation platform. In 2024, our volume growth will be lower, as we have said, because we're trying to focus the team on the launch of the next generation vehicle.
All right. Thank you very much. The next question is from Michael. When will Tesla start construction on the Giga Nevada expansion and Giga Mexico? And when can we expect each of these to produce their first products, such as 4680 cells, Semi, and the next-gen vehicles?
We have recently broken ground for the next phase of Giga Nevada expansion to incorporate Semi and other projects. But as said earlier, as regarding Mexico, we want to first demonstrate success with the next generation platform in Austin before we start construction. Therefore, we have started the long lead work to get the basics ready and plan to follow our recipe from the 3Y ramp with Shanghai, where we started with learnings from Fremont and ramped really quickly.
Yeah, exactly. It's important to emphasize that, Model 3 production was 3 years of hell. Honestly, before some of the worst years of my life, frankly. I still have mental scar tissue from those 3 years, as do many. But then Model Y was somewhat of a variant on Model 3, so a much easier situation. And then we were able to actually do slightly improved versions of, in some cases, significantly improved versions of the Model Y production line in Shanghai and Berlin. And that's the right. I think the sensible way to go about things is kind of figure out the core technology of the manufacturing line and then replicate it with improvements throughout the world. So.
Thank you. The next question from Michael is, has there been any progress made with an FSD licensing agreement with another company?
I really think lots of car companies should be asking for FSD licenses, but and we've had some tentative conversations, but I think they don't believe it's real quite yet. I think that will become obvious probably this year. And I do want to emphasize that if I were CEO of another car company, I would definitely be calling Tesla and asking to license Tesla full self-driving technology. It's definitely the smart move.
Thank you. The next question from Siddharth. What is the timeline for Optimus' first production of a volume production line, and what are the barriers to getting there?
Optimus obviously is a very new product, an extremely revolutionary product, and something that I think has the potential to far exceed the value of everything else that Tesla combined. And when you think of an economy is productivity per capita times capita. But what if there's no limit to capita? There's no limit to the economy. And the technologies the AI technologies we've developed for the car translate quite well to a humanoid robot, because the car is just a robot on 4 wheels. Tesla is arguably already the biggest robot maker in the world. It's just a 4-wheeled robot. So Optimus is a humanoid robot with arms and legs. It's by far the most sophisticated humanoid robot that's being developed anywhere in the world. I think we've got a good chance of shipping some number of Optimus units next year. But like I said, this is a brand new product. A lot of uncertainty. When there's a lot of uncertainty and you're in uncharted territory, it's obviously impossible to make a precise prediction. But we will be updating the public with progress on Optimus, every few months, and you can see that it's advancing very quickly. I was just in the Optimus lab actually until late last night, until like midnight or something. And finally left the Optimus lab. The team's doing amazing work. That's obviously a case where we want to make sure that Optimus is safe, especially at scale, and that there's no. It should be impossible for any centralized control to upload malware to a humanoid robot. So we're going to want to build in localized shuttle that cannot be updated from the from a central server. That's a case where we really have to give extreme thought to safety. But like I said, I do think it has the potential to be the most valuable product of any kind ever, by far.
Just to comment on the barrier, I think the barrier, and we've talked about this, is like getting it to actually do something useful. Like we can get it to walk around, we can get it to do things, but it's like that utility part.
We can already do some useful things.
But like, to making millions of these things, it's like utility. Got to get the utility up.
Yeah. A smart robot that can do that's capable of doing generalized tasks is what it will be. And in terms of doing, moderately specialized tasks, well, it can already do that, and it'll just get better through the course of the year. As we improve the technology in the car, we improve the technology in Optimus at the same time. It runs the same AI inference computer that's on the car. Same training technology. We're really building the future. The Optimus lab looks like the set of Westworld. But admittedly, that was not a super utopian situation.
Yeah, not the best reference.
Yeah, the creators of Westworld, Jonah Nolan, at least Jonah Nolan, old friends of mine actually, and I invited them to come see the lab. I think they'll come see it hopefully soon. It's pretty wild, especially the sort of subsystem test stands where you've just got like one leg on a test stand, just doing repetitive exercises, and one arm on a test stand. Pretty wild. Yeah.
We're not entering Westworld anytime soon.
Right. Well, and take safety very, very seriously.
Well, thank you. The next question from Nermin is, how many Cybertruck orders are in the queue, and when do you anticipate to be able to fulfill existing orders?
First of all, I want to thank all the Cybertruck reservation holders for their patience. The reservation to order conversion rate so far has been very, very encouraging. If the trend continues, as it's very likely to be, we will soon sort out all the builds in 2024. And also, we have new orders coming after the launch. The order numbers keep growing. So we're now all hands on deck, focused on ramping, so we can, fulfill all the demands in a reduced wait time.
Yeah, it's important to emphasize that this is very much a production constrained situation, not a demand constrained situation. And we, obviously, we could dramatically raise the price, but that doesn't feel right to us to sort of gouge people for for early delivery. But really the demand is off the hook. As long as the price is affordable, I see us ultimately delivering on the order of something like 250,000 Cybertrucks a year in North America, but maybe more, but give or take, roughly on that time frame. And it sure is a head turner.
Definitely is.
Yeah.
Anywhere you go, people look at you.
Yeah.
They give you thumbs up.
Yeah, it's like finally the future looks like the future. Yep. For for the other trucks on the road there, and there's some very good trucks on the road, but if you were to switch out the brand name, you wouldn't hardly know which company made them, but you definitely would know the Cybertruck. That's our best product ever.
All right, thank you. The next question is, can we get Tesla energy volumes reported in the production and delivery release?
Yeah, we will strive to do so starting from this quarter. And just a brief update from the business perspective. Megapack continues to see strong demand signals globally, driving consistent growth trajectory through 24 and 25. We want to thank all of our partners who've put their trust in the Megapack team to execute on critical infrastructure around the world. And I would like to personally thank the Megapack engineering and production teams for their strong 2023 execution. Lathrop continues to ramp through 2024 with the operation of a second final assembly line to double capacity from 20 to 40 gigawatt hours by the end of the year.
Thank you. And the last investor question is from Siddharth. What are the preliminary results on return on investment of your ads and education campaign? Given that many people still lack awareness that Tesla average price is less than the average non-luxury car price of $45,000, will you expand educational ads?
As Elon mentioned, the ultimate solution to increase EV adoption is really address the affordability issue. But at the same time, we do aware there's an awareness issue as well. So in Q4, we ran a series of digital campaigns, very targeted digital campaigns across different geos and different channels. The target of these tests is really just to drive awareness and ultimately measure the return of investment on those digital channels. The messaging we're driving is really focused on our product and also try to address some of the misconception of the EV, such as safety, affordability. In one particular awareness campaign we run in Texas, we reached the audience about 10 million unique viewers and generated close to 500,000 visits to our website. A large number of these viewers are first-time visitors to our site. The traffic through these digital channels actually behaved very similar to those organic traffic come to our website. So going forward, we're just going to keep exploring different channels and doing our trials to get a better understanding of this effectiveness of this digital campaigns.
But I would also like to caution that we'll be very careful that we don't want to overspend on this side. We want to make sure people are aware, but that's where we'll keep tweaking our methodology about how and where we spend the money, because we understand the importance of increasing awareness, but at the same token, we don't want to spend a lot of money on just creating awareness.
Yeah, I mean, there are some geographies where our market share is remarkably low, like Japan, for example. Now, we obviously need to make sure that we have superchargers in the right locations and the service centers are there and the product works well in Japan. But Japan is the third largest car market in the world of any country. So, and we should at least have a market share proportionate to, say, other non-Japanese car makers like Mercedes or BMW, which we do not currently have. So I think that's the case. And when I talk to friends of mine in Japan, they're like, there is like quite a lack of awareness of Tesla. So, you know, that's the case where we definitely need to increase awareness in countries and regions where there is, not that much awareness.
Thank you. Let's go to analyst questions. The first question comes from Pierre Ferragu from New Street Research. Pierre, go ahead, please. Feel free to unmute. Pierre, can you hear us?
Okay. Wow, it's really tough to find the unmute button on Teams, guys. I'm sorry for being late. So yes, my question would be, on like the cost reduction. You've talked about it already a lot, and if I look at it over the last like 5-6 quarters on average, the COGS per car has been coming down like more than 2% sequentially on average. So that means you're like on a trajectory of COGS per car going down 10% a year. So that's probably like unheard of in the auto industry. I don't think any car manufacturer ever achieved that. But that's very, very mundane and it's a good performance, but it's a very normal performance in a lot of other manufacturing industry like microelectronics or consumer electronics. And so I'd love to hear your thoughts about whether you consider yourself closer to the latter, to like a microelectronics business where you have this ability to actually always improve cost, you have more control on how things are pulled together into your fabs, and you see yourself sustainably taking costs down with that kind of pace? Or do you think your ability to take down cost is actually going to become more like in line with the rest in the industry over time?
Yeah, I think I've covered this in a pretty lengthy detail, even in my opening remarks and in a previous question. But to just further clarify, we are constantly looking for what we can do to reduce costs. And like I said, it's a game of pennies. We've talked about it before as well. And the team is constantly going and checking where can we reduce the cost further. And do I believe that we will have the same pace which you've seen over the past few years? Probably not, because remember, we were coming out with a period wherein commodity prices were rising. So then we did see benefits coming from that. So those are more or less, taken care of. But there is more which we're still chasing. And, I would say a big kudos goes to the team out here at Tesla, both the engineering team as well as the supply chain team, because every time we give them a challenge, they go gangbusters to try and figure out whatever they can to take out further cost. But yes, I would want to caution that do not project the previous cost reduction at the same pace completely in the future, because with our current platform, we are getting to a place wherein, there are limitations.
Yeah, the increased scale also sort of helps us there. As we introduce new products, we have the opportunity to go renegotiate existing suppliers for better pricing. We're looking at every penny, like Vaibhav and Elon mentioned. Just to give you an example, our inbound logistics cost has come down by 22% year over year. And this is because of optimization on using returnable packaging as opposed to cardboard, which is even better for the environment. Optimizing trucking routes, negotiating better pricing with shipping companies, with trucking companies, going with full truckloads, and just doing that sort of. The bigger we become, the more we put thought into these things, and the more efficient we become as a result of it. So those work streams are going to continue.
And we are also getting into the tiers of supply chain to see if there are opportunities.
Yeah.
Getting into the tier 2s, tier 3, tier 4 levels, and then negotiate those pricing as well to get more efficiency out of the system.
And then on the design side, we're not static, right? Like, especially in areas where the technology is still improving rapidly. Power electronics is a great example. We continue to bring improvements there that are like fundamentals, sort of driven from the device up, that result in cost reductions generation over generation, and they don't only go into the new vehicles; they come to the old vehicles as well. So that's closer to what you were talking about with like the microelectronics space. Some of that exists in the vehicle.
Yeah, certainly our car is more computer than car in many ways, and has a lot of new tech over the last 100 years of automotive production that everyone trying to scrape pennies from.
We have a crazy amount of computing in our cars compared to anyone else.
Yeah,
it's like orders of magnitude.
And we get to ride that down, right?
1,000 times more. I don't know, some nutty number.
I mean, like if I just look at the main microcontroller that makes the motor go, for example, like when I think about what it cost when we stuck it in a Roadster in 2006, and what it costs now, I mean, it's like there's no comparison. Yeah. So we've definitely been riding that electronics cost wave.
Yeah.
And then even on the what you call traditional vehicle side, we do things that no other automakers do to bring costs down through breaking down, the way structures are built and the way we put our cars together. And I think that mindset that we have is very much closer to the micro processor or power electronics industry than the automotive industry.
Thank you. Pierre, do you have a follow-up?
Great. Yes, a quick one. It's you mentioned this like phase in which you are between two big growth periods. I'd love to hear you about what you consider the size of your addressable market with the portfolio you have today, like the 3, the Y, the X, and the S. What's your estimate of your addressable market? You're shipping like probably about like a 2 million unit run rate today. And given the price points of these cars, what kind of market share of what you address with these cars do you think you've already achieved today?
I don't know if anybody. I actually don't think we have a firm.
Yeah, I'm like
idea of this. It's hard to say exactly.
Yeah, I won't say there's. I mean, one way to think about it is look at the automotive industry as well. EVs still contribute a very small market share. So yes, our goal is to try and take as much market share out of that pie. But do I have a specific number to give you? I don't think we can say that with certainty.
And it's a growing pie as well.
Exactly.
So like it's 9% today, but it could be 20% in a couple of years or in the future.
Yeah.
And certainly, like the way we've looked at it, and we've always said this, it's not about how many EVs you can sell, it's how many great cars you can sell, how many vehicles you can sell, and that market's 100 million a year, and we're barely 2% of that. I still think there's 98% more to get.
Yeah, I mean, it's worth noting that if you look at, say, the average selling price of the other top-selling vehicles in the world, they are much lower priced than a Model Y.
Yeah.
So like a Toyota RAV4 or Corolla, Honda Civic, that kind of thing, they're much lower priced than ours. So people are really stretching their wallets to be able to afford a Tesla. It's quite a difficult thing for them to do, and remarkable that it's the best-selling car in unit volume, despite being much more expensive than other high-volume cars.
Thank you. Let's go to the next analyst. The next question comes from Adam Jonas from Morgan Stanley.
Hey, everybody. So I can't wait to see the Optimus Lab. I'm sure everybody on this call feels the same way. Your last AI day, Elon, was September 2022. Can we expect a Tesla AI day this year? It seems like a lot's changed in that realm. And is this year the time?
Yeah, it's a good question. We have found that when we do these AI days, some of our competitors literally look at what we do on a frame-by-frame basis.
They do.
And then we find these things being copied.
Same thing with Battery Day.
Same thing with Battery Day. So we have to be a little cautious about, revealing the exact recipe of the secret sauce. But I think some kind of update would be good to do. I'll talk it over with the team, and I think we might do something later this year. Our main goal with these AI Day things is recruiting. So
yes,
and to sort of change the perception of Tesla as people think of Tesla as a car company when they should be thinking of Tesla as an AI robotics company.
Mm-hmm. Maybe as a follow-up, Elon, I'd love your thoughts on the topic of China-based OEMs expanding into Western markets as the China market kind of gets saturated and there's a tremendous growth in the supply. How much success should Tesla investors allow for this competition to achieve in Western markets? And can you envision a scenario where Tesla could partner with a Chinese OEM to help accelerate sustainable transport in markets like Europe and the United States? Thanks.
Well, our observation is generally that the Chinese car companies are the most competitive car companies in the world. So I think they will have significant success outside of China, depending on what kind of tariffs or trade barriers are established. Frankly, I think if there are not trade barriers established, they will pretty much demolish most other car companies in the world. So they're extremely good. We don't see an obvious opportunity to partner. Certainly we're happy to, except on the supercharger front, we're obviously happy to give any electric car company access to our supercharger network. We're also happy to license full self-driving, perhaps license other technologies, and anything that could be helpful in advancing the sustainable energy revolution.
Thank you. And the next question comes from Dan Levi from Barclays.
Hi, good evening. Thank you for taking the questions. First, I'm wondering if you can just walk through some of the gating factors required to unlock your next-gen platform. You talked about a number of cost initiatives back at the Investor Day a year ago, things in manufacturing and powertrain. Maybe you can just give us a sense of where these initiatives stand. And do you believe it? We know that there's a number of new features and technologies in Cybertruck, things like 48-volt architecture, and really employing your 4680 batteries. To what extent do you think Cybertruck is really a proving ground for the next-gen platform and is really going to be a gating factor to unlocking the cost reductions needed for the next-gen platform?
Yeah, I don't think that anything on Cybertruck should be considered gating for the next gen platform. We're obviously doing a lot of manufacturing innovation, as Elon said, for a next generation vehicle. When you do something at that scale, you have to prove it out. You don't just throw it on the line and just build it. So we're going through those validation phases for all of those new manufacturing technologies now. Sure, 48 volt was definitely something we wanted to carry forward, and it's something we hope the industry adopts as well. We're also open to partnering on that if everyone wants to do that.
Finally, man, the people that really know that this is like the inside baseball thing, but 48, it's so high time that the auto industry moved from 12, the random number of 12 to 48.
Random number of 48.
Yeah, well, it's much less random.
Slightly less random based on human injury, but
dramatically reduces the amount of copper you need in the vehicle, and and also moving to a sort of higher bandwidth communications, sort of Ethernet level communications versus CAN bus, which is pretty
slow.
So it's really just bringing cars to the
21st century.
Yeah, pretty much.
So like certainly like
it's not exactly, it's like normal for a laptop.
Yeah. Certainly bringing that is an evolution in our architectures of vehicles, but it's not gating by any means. The gating work is just to finish the design and manufacturing of the car, test them out, and get them going.
Yeah, programs in execution mode, right?
Yep.
Right. So it's talking about like tooling lead time, manufacturing
factory lead
time, factory lead time, and executing those programs.
There's a lot of specialized machines that make the machine for our next gen vehicle. So these are not machines you can just order from anyone. We have to design a machine that has never existed to build a car in a way that has never existed.
Yeah, so you don't just have like a design validation phase, but you have an equipment design validation phase as well.
It does make it very hard to copy us because you have to copy the machine that makes the machine that makes the machine. So,
talk about tiers.
It's not, it's exactly manufacturing exception. So I do think it's quite a powerful sustainable advantage because there just is no place to go to order the machines that make our next gen car that don't exist.
Great, thank you. As a follow-up, your release does not mention Dojo, so if you could just provide us an update on where Dojo stands and at what point you expect Dojo to be a resource in improving FSD, or do you think that you now have sufficient supply of NVIDIA GPUs needed for the training of the system?
I mean, the AI hardware question is that is a deep one. So we're obviously hedging our bets here with significant orders of NVIDIA GPUs, or GPUs are the wrong word. There really needs to be, there's no, it doesn't, you can't like produce graphics. So that's what, it's not a graphics processing unit, neural net processing unit or something like that. Yeah, GPU is a funny word, like vestigial. So, and a lot of our progress in self-driving is training limited. Something that's important with training, it's much like a human. The more effort you put into training, the less effort you need in inference. So just like a person, if you train in a subject, it's sort of classic 10,000 hours, the less mental effort it takes to do something. If you remember when you first started to drive, how much of your mental capacity it took to drive, you had to be focused completely on driving. Then after you've been driving for many years, it only takes a little bit of your mind to drive, and you can think about other things and still drive safely. So the more training you do, the more efficient it is at the inference level. So we do need a lot of training. And we're pursuing the dual path of NVIDIA and Dojo. But I would think of Dojo as a long shot. It's a long shot worth taking because the payoff is potentially very high, but it's not something that is a high probability. It's not like a sure thing at all. It's a high risk, high payoff program. Dojo is working, and it is doing training jobs. So, and we're scaling it up, and we have plans for Dojo 1.5, Dojo 2, Dojo 3, and whatnot. So, I think it's got potential, but I can't emphasize enough: high risk, high payoff. So, I think it still makes sense given the, even if it's a low probability of success for the very high. Yeah, I think anyway. I'm belaboring the subject. It's a very interesting program. It has the potential for something special. There's also our inference hardware in the car. So we're now on what's called hardware 4, but it's actually version 2 of the Tesla designed AI inference chip. And we're about to complete design of, the terminology is a bit confusing. We're about to complete design of hardware 5, which is actually version 3 of the Tesla design chip, because the version 1 was Mobileye, version 2 was NVIDIA, and then version 3 was Tesla. So, and we're making gigantic improvements with, from hardware 3 to 4 to 5. There's a potentially interesting play where, when cars are not in use in the future, that the in-car computer can do generalized AI tasks, can run a sort of, GPT-4 or 3 or something like that. If you've got tens of millions of vehicles out there, even in a robotaxi scenario where they're in heavy use, maybe they're used 50 out of 168 hours. That still leaves, well over 100 hours of time available of compute hours. It's possible, with the right architectural decisions, that Tesla may in the future have more compute than everyone else combined.
Thank you. And the next question comes from Colin Langham from Wells Fargo.
Oh, great. Thanks for taking my questions. As we're thinking about going into 2024, the press release talks about hitting 36,000 or slightly above in Q4. And the comments of the release talk about approaching the natural limits, and it sounds like you're continuing to try to whittle that away, but that sort of implies there's not much left. In addition, you have the hourly wage increase, I guess, so we'll add to that into next year. And I thought you said raw material costs are that benefit is sort of almost played out. So is there an opportunity to continue to go below the 36, or should we kind of be modeling that it kind of stays at this level into 24?
We are definitely aware of the cost increases which are coming through because of the wage increases. But like I said, we keep looking at other cost opportunities and try and figure out where else can we cut down. So there is definitely more opportunity to bring down costs further. I won't specifically guide to a number which we will try and get to, but there's definitely more opportunity there.
Yeah, we're chasing lots of cost opportunities on the design side still for 2024. North of 8 figures is what we're worth of, just in my organization, and Lars has got a bunch. And then from a commodities perspective, it's such a long cycle time through the whole material supply chain that even with what we've already seen to this point, there's more to come on commodities reductions.
And there's still some tailwind left on the commodity.
That's what I mean. Yeah.
And aluminum and steel.
Yeah.
And battery materials.
It boggles my mind to think that if we make a 1% improvement in costs, that's $1 billion.
Yeah.
Yeah.
So it's like, on average, if we reduce the cost by 1 penny, $1 billion. What? And we started off, wasn't that long ago, that we're only making like 10 cars a week. Yeah. So where does it lead ultimately? With good execution, like I said, it's not a slam dunk, but with if we execute very well, I think Tesla could be the most valuable company in the world.
Thank you. Colin, do you have a follow-up question?
Yeah, just a quick follow-up. In the commentary, you mentioned the taxes would go to the S&P 500 level. I think you've been trending slightly below 10%. S&P, I think, is typically 25%-ish. Is that going to, should we expect that to jump right up next year when we're modeling next year? Or would it be like a gradual change over the next few years? And any cash impact from that tax change as well that we should be considering?
Yeah, so there's no impact on cash taxes from the release of the valuation allowance, which I spoke about. What it does is it's how you account for taxes on your books. So it's basically an accounting change, wherein there are certain jurisdictions, because we had enough NOLs, etc., wherein we didn't have to accrue book taxes. Now that the valuation allowance has been released and we have recognized deferred tax assets on the books, that means your tax rate immediately goes up.
Okay. I think that's all the time we have for today. Thank you so much for all of your questions, and we'll speak to you again in 3 months. Thank you. Bye-bye.
Thank you.
Okay. And we are alive once more. Okay, can you guys hear me?
Yep.
Yes, sir.
Okay, perfect. Oh my God, where's... Oh, because I boosted my audio. Jeez. Okay, here we go. All right. So I took notes, but I don't know if anybody wants to maybe go first on this. There's a few interesting things that I highlighted, but who wants to go first?
FSD shipping in a few weeks. That was the one that stuck out to me most right at the outset.
Too loud.
Why are you yelling at me, bro?
FSD
Jesus.
shipping in a few weeks. I didn't
honestly, that's
anything.
better.
All right, I'll try.
Yeah.
I'll just talk like this the rest of the stream. We'll see how you like that.
Much better.
I mean, yeah, I heard a lot of things. That's one of the positive things. The rest were a little bit negative, right? So they did not give any guidance at all, which is something I was really hoping that they would. They didn't do that. Dojo conversations seemed like, he just kept repeating, right? That it's a high risk, high reward, but it's going to be, high risk. So it's not yet there's something that they can count on and say it's going to actually happen. It is in production. It is helping, but it's not yet, they're not saying, he's not saying that it's for sure going to be a big deal for them. That was a little bit of a downer there. The bot, he did say that it will have some number of bots by next year. It's a very new product, so he also, was very conservative about that. But and it's always like this. Whenever he says statements like that, everybody just jumps to those clear statements, but then they ignore all the things he keeps saying. Right? How many times did he say that I can see a path for us to become the largest company in the world? He said that, 2 or 3 times. You can't believe the bot lab. That thing's just amazing and brilliant. We've got this potential for, being the largest compute by far with everyone else combined, if you count all the cars, which are already the largest robot company in the world. And if you take their compute in the in-car computer, use it while it's not being used. So it is very interesting how, there's these forward-looking statements that gets everybody excited, and yet he's also very conservative about some things. And so at the end of the day, I'm, a little bit more conservative of what I just heard. And those are just a quick update there.
Hans or Mott? Hans,
Mutt.
go ahead. He looks like
yeah. I mean, I picked up on some of the same things. I think that the comment that Drew made about the 4680s being ahead of the Cybertruck ramp is positive, but also maybe should be something people think about the context there. That if their target is really based on the Cybertruck, I think that means that 4680 production, at least out of the Austin Gigafactory, is going to be 100% dedicated to the Cybertruck ramp for the foreseeable future. And so I wouldn't expect Tesla manufactured 4680 cells out of that factory to really contribute to the growth of any other products besides Cybertruck. But it is good to see that they are making solid progress, that they have, plans in the works to expand the number of lines they have going there. And it's good to see them really just continuing the month over month improvements in cell output there. The other thing that I keyed in on was the Optimus really having some volume shipments next year. So be curious to know what Elon thinks of as volume. And I'm assuming that's still going to be internal use only. But it's interesting that kind of coincides with the ramp of the next gen vehicle that he also said second half of 2025, and that it's very possible that the goal is to reach some initial rate of volume production of Optimus to actually supply labor to Giga Mexico or Giga Austin. So that was very interesting as well. The guidance that Elon said, 250,000 year Cybertruck volume, he continues to reiterate that. I continue to think he's absolutely full of crap on that. There's no way that it tops out at 250,000. It's going to be way higher. It was cool to see that we got some color on the advertising and marketing, that they drove so much traffic to the website, and that the actual performance of that traffic once it hit the site was very similar to their organic traffic. And so it's not like they're paying for low quality traffic to the site, but seemed like it was effective. And then, of course, they kind of crapped on that by saying, and we're not going to spend very much money doing this, even though the results seem to be promising. It is nice, though, to know that they have lots of ability to control that locally wherever they want. And so they can, one of the things that Rob Maurer has talked about a lot is demand pockets, and that there are demand pockets both in time, but also by geography. And so it's cool to see that they can use this for targeted mitigation of a demand pocket that they may be seeing in one area for one specific period of time for one specific reason. And so hopefully we continue to see a lot of movement forward on that front. I think those were the main things. The other thing that really piqued my curiosity was the mention of a Dojo 1.5 chip. That's the first time that I'm aware of that we've heard anything about a 1.5 version. He's talked about 2 before, and based on the comments about Dojo overall, it seems to be pretty much tracking with my expectations that NVIDIA still continues to be the workhorse for the overall AI training that they're doing. They are using Dojo, but it is definitely not the thing that they are relying on. And so they're going to continue to develop the Dojo chips. They will hopefully improve the performance and make them much more general. The first version was really aimed at video training and was designed well before all of the breakthroughs that we've seen in AI over the last couple of years with companies like OpenAI that have really shown a new way to train these artificial intelligence models. And so as Tesla works on developing meat-based GPT, which is the real world version of Chat GPT that takes in data from the real world and outputs actual actions to a robot that are intelligent in a similar way that Chat GPT would be intelligent. Um, just using the video training architecture that they started out with when they were initially designing Dojo. I mean, I don't even know how many years ago now that the design would have been getting set down in stone for Dojo V1. That whole schema didn't exist yet. And so they definitely have to kind of make some updates to the design. So that's what I'm curious about. What does Dojo 1.5 look like? Is that something where they can actually use a mildly updated version of the Dojo V1 chip to do the type of training that they're actually doing with NVIDIA chips these days? That would be very interesting to know. I don't think we are going to get any information on that until potentially if Elon was correct and we do get an AI day here in the not too distant future, we may hear something about it there. But that's something definitely to watch. But all that said, they are moving forward with NVIDIA chips fast enough to continue to roll out all of the FSD growth that we've seen. They've been able to train V12. Obviously, they're continuing to grow the deployment of Optimus and the quality of the software there. So I don't think that we have to be worried about whether or not the lack of progress on Dojo is putting anything into question for Tesla's AI and robotics future. And Herbert and I have had this discussion pretty extensively. But that said, if the more they can rely on Dojo, the cheaper all of those operations are going to be for them, because Dojo is going to not only cost less to install up front, but Dojo is going to also probably be a lot more energy efficient. And so the overall cost of doing that training is going to be a lot lower if they can use it on Dojo. And then if they can achieve those things simultaneously and they have excess capacity, then they can really sell training as a service and undercut clouds that are using NVIDIA based hardware, because they will have an edge on energy usage and therefore cost. So yeah, those are the reasons that we really pay attention to this area and look at it very closely. What we learned today just basically confirms that there's nothing huge here that's going to be material to the stock right now and just needs to be monitored going forward.
Matt, what's going through your mind?
Yeah, I would say that the call was maybe broadly in line with how I expected it to go. Elon was kind of down some stuff like Dojo, but I don't really view that as a surprise. In fact, he's already said that before. He repeated himself like 5 times that it was high risk, high reward today. But that's not new information. He's said that. I forget when the last time he said it was, but that was not new. So really, there wasn't a whole lot of new information, I thought, on the call. It's interesting. I'm just kind of looking through some of the comments here, and obviously the stock is down, and it's the overall emotion is very negative. But I'm kind of looking at this and saying, yeah, this is like reasonably in line with how I was expecting it. Now maybe the stock even drops further from here, but I'm seeing a lot of people even in the comments just be like, oh, like this stock is garbage, like the glory days are over, it's all over. I'm like, no, like this is just we're in this year 2024 where we're kind of in a building year. We're in between the two waves, and if you believe in this stuff, like I think it's really important to take a step back every once in a while and think about, like, do you actually believe in the thesis of AI and just like the accelerated capabilities that AI in general, take Tesla out of the topic, out of the conversation, is going to have? And then if that's true, like which companies are going to benefit from that? And I think it's very hard to not imagine, or to imagine a scenario where AI really takes off in the way that some of us, kind of technologists and optimists think that it is capable of, and really changing the world. And Tesla doesn't do well in that type of environment. So, I'm a finance nerd. I like to look at the numbers. I'd like to kind of understand where Wall Street is and understand the sentiment. But right now, like, I don't know, things are looking a little maybe too negative in the comments. Don't expect a fast turnaround. Like, if you need your money in the next 12 months, yeah, maybe don't go all in on Tesla. But if you're here for the long haul, I don't think there's anything in the call that really changed or altered my thesis in any significant way.
Yeah, I agree with that. For me, it seems like some of the commentary we were having before the call was, this is, the foundation's being laid for the next growth spurt. And I think what I heard very much aligned with that. Compact car next year, maybe, an optimistic next year with quote unquote Optimus first shipments next year, which I was surprised to hear that. But again, fully expect that to not come to fruition. And then their plans around AI with FSD are still going well. They're investing heavily in NVIDIA and H100s. They're not dependent on Dojo to be the breakthrough. It's a bummer. Again, it's a bummer to continue to hear the rhetoric that the Dojo is a long shot bet, even though it was kind of the same rhetoric from the beginning. But still, it's sort of like when I'm used to Tesla investing in a new technology, and that new technology sort of being the thing that drives it more often than not. And it could be, the worst case scenario is Tesla doesn't solve FSD with Dojo, they solve FSD with NVIDIA H100s. Whoop-de-doo. Who cares, right? Big deal at that point. So I am also, I think the negative sentiment in the comments, everybody, obviously I love the open discussion in the comment section, but I do think if you're a long-term investor, there was absolutely nothing about this call and earnings, in my opinion, that would instill some sort of like fundamental fear in the story. It's just like, okay, it's not growing as fast as some people would like, as I would like in 2024. It is what it is. They're laying out the groundwork. From a execution standpoint in the past, when it comes to these giant projects, these sort of next legs, like when they built the Model S versus the Roadster, when they built the Model 3 versus the Model S, when they built the Model Y to take the company to the next level, they've executed all their big goals. And now they have that, they have the compact car plus FSD plus the bot. Now they have 3 giant ones that are coming to fruition. So yeah, I think fine call. I expected more negativity, and I didn't really get it. It was more like it just felt a little bit more even than other calls, I would say. Alexandra, what's your thoughts?
Hi. So the 3 negatives were nobody on the horizon for FSD licensing. Now, I'm really surprised how they. Oh, I'm sorry. Is my stream really bad? I've closed everything out. I'm sorry.
You came back.
But I really, that's. Okay, perfect. Sorry about that. So I'm really actually surprised by these OEMs, right? I mean, they don't see it. They obviously don't want to throw money at it, and so that's going to be delayed. But it's a bummer because last year we thought there was somebody in the pipeline. Dojo is obviously not building as quickly as he wanted. It's still on the way. The team has been changed. The bet is getting riskier. I mean, I know he said that before, but I had the feeling Dojo was more on a, AI day 2 gave me a really good stomach feeling. I don't have that anymore. And obviously this lack of guidance. So that's what they're going to hammer us with the next couple of days. I think the stock can go quite below 200 now. So somebody wants to buy, this is certainly a good opportunity. I mean, I can't understand how people can buy these other Mac 5s at the levels they are and spit on Tesla, but that's what happens, right? People just love to buy stock at high prices and don't see it when it's down. For me, the long-term investment thesis is completely unchanged. I see Tesla executing on cars, on energy, and on bots, and people still don't understand that actually FSD is not only the key to full self-drive for the car, but also to the bot. That is the element that lots of other people are missing. The whole experience, the whole year-long experience that Tesla has on that field. Found it interesting that he felt that both Battery Days and IA Day gave too much information to competitors, which also recognizes that there are competitors. Remember, a year or two ago, the second one was so far away you couldn't even see him. Well, now suddenly people are stealing information, so that sort of changed the tone. But I mean, it didn't bother me to put my all-in investment thesis in question. So fair enough. It's going to be with some delays. It's going to be choppy. Was it ever a smooth ride? And I consider the next couple of weeks good buying opportunities.
Thank you for that. Jeff, let me bring you here for a second, but this is off topic, but I have to do it because I know people that follow me. Jim Harbaugh is going to the LA Chargers. So he's leaving Michigan. So FYI. Okay, let's go, Jeff. Ha in your face, Matt. You look so sad. You only got one national championship. Oh, go ahead, Jeff.
Not to mention the Lions are poised in great position to go to the Super Bowl for the first time like ever. So
I'm pulling for them. Gotcha.
Yeah, as a Bears fan, I think a lot of us wanted to see him. There's a lot of rumors coming to the Bears. Yeah, so on the earnings call, definitely pros and cons. I do think the overall tone of the call was more positive compared to prior calls. I don't think there was any kind of doom and gloom takeaway from the call. I think they're being careful, and I think they're being appropriate in terms of some of their guidance. Obviously, the reason it's hard to prescribe one reason or another, but obviously not giving a formal guidance on volumes can be an issue. I thought the first couple of answers on COGS and gross margin weren't good. They didn't serve the actual performance of COGS and gross margin, which were exceptional, industry leading when it comes to the COGS decline. But then when Karn, Roshan, who both lead kind of halves of the supply chain, and Lars and Drew weighed in, that you heard it just flowed in terms of like what they're doing to take COGS down and what kind of confidence they have going forward. Of course, it doesn't continue in perpetuity, but it sounds like they have a lot of ideas, and those are in the event-driven camp, which where you make a change, you roll it into production. They have industry-leading inventory, so they can roll it in pretty quickly. So I like the real answers on COGS that were given. I think they came in for the save. I thought the first couple of answers were just kind of like, I don't want to answer the question. And so I think the real question there is, are you going to do your pricing reductions in line with your COGS reductions? I think that was I think I asked that question. I think that's the more appropriate thing and they may have said, hey, we don't have a crystal ball. We don't know. But I do think that they kind of answered that question really well in the end. I felt very good about that. The 4680 thing, not gating Cybertruck, to me, that's good for Cybertruck, but that's the answer you want to hear is like, we're not gating anything, and we're starting to kind of really go up the S curve. I thought there were some good answers, but I think, really want to understand, where they're at on that. Talked about demand on the Cybertruck, and the CapEx going north of 10 billion. This is a company that is spending for the future. I found that to be, and then they had record CapEx and record R&D in the past. So the way I see this moving forward is I do think there's a hit. If you don't guide, I think there's a bit of a hit. But this also could be like, hey, we're kind of drawing a line in the sand. We think we're going to grow probably faster than any other automaker, right? In terms of definitely in the Western Hemisphere, maybe overall in terms of the major automakers. So growth in line with that. And, I think they've sort of steadied the ship as it comes to gross margins. And now it depends what your time horizon is. It's not a very long time horizon to get to this next vehicle. I thought the answer of the second half is in line with what these kind of leak communications are talking about, which was suppliers ready to go in the middle part of the year. So those are some of my takeaways. They had some really good specifics on what they're doing with COGS. They just jumped in and started flowing. I thought that was great. But again, I think short term it gets hit a little bit without the guidance, but you can also kind of view it as like, was this the line in the sand? Like, is there any more, bad news out there? Or was this as bad as it can get?
Any other thoughts from the call that y'all would like to bring up?
Yeah, the only thing I wanted to maybe add is like the dojo, that seems like such bad news, but in my mind, that's always been about kind of avoiding costs, and maybe there's like some dojo like training as a service, kind of capability. But the upside has always been like autonomy and then bot, which you're using this to train from. And it's like the classic make versus buy decision. Like, and in a make versus buy decision, it's not like you're going to save, I don't know, like 60% of your cost by making it. There's, it's maybe it would work out that way, but then you're talking about like a minor cost reduction in your training stack, which like these H100s are expensive. Let's not like avoid that, but look at like the CapEx that they're spending. It's like several $billion per year, and put that in context of the upside opportunity with FSD. Like the upside is way more important than whether Dojo works out or not. In my mind. So I of course still hope it does work out. I think if they could do some sort of house-built computer that they could license out a la AWS, that'd be really cool, and like a new top-line business opportunity that we could start maybe thinking about. But in my mind, that's not nearly as important as do they actually solve FSD, whether it's with NVIDIA chips or Dojo chips. So I just wanted like what actually matters, and I think it's important to kind of underline that point, that solving FSD is what matters, not which chips it's done with.
Yeah,
I just wanted to
go ahead, Herbert. No, I just want to say I liked his wording, saying I'm hedging with NVIDIA chips. When you hedge, you still have a plan A, right? Your hedge is to secure plan A. So I do believe the Dojo is still plan A, but the hedging is obviously necessary.
Okay. Yeah. So I think, it's just a little sitting here a little bit longer, 10 minutes as we are talking, it's kind of crystallizing a little bit. So what matters most? What really matters most, right? I really wanted them to hammer that this is a robotics AI company. They didn't do that, but they did mention that at the end when he was in a question. Having said that, if you listen to what they have actually talked about, that was really good news. One is FSD is actually rolling out to customers in the next couple of weeks. So maybe in a month or two, it's rolling out. That means it's moving along quite nicely. They talked about it being compute constrained, as we know. They talked about that this, the compute that Tesla has, if you include the car's compute, could be the largest compute ever combined. That's incredible. And then, of course, the bot as well. So the bot, you got to remember what words he used. He's basically talking about, the bots being delivered. That means not just to their own use, but actually to, outside customers next year. So that does not mean that they're not going to start using the bot in-house at smaller numbers. But that looks like that's still very impressive. He spent a long time talking about incredible lab, the things that they're accomplishing there. So those are the things that really matter, right? AI, full self-driving, the bot, and the compute that they have. So it's still the long-term story of what this is that differentiates itself from any other company. Then, of course, he's iterated twice. This could be the largest company in the world. I see the path for it to do that. It's, I think it's we're still on track.
Yeah, I was just gonna give Matt and Emmett, who's no longer here to show off his amazing pecs for us, huge kudos, because I remember the interview that y'all did with Gary Marcus and Naveen Rao. It's been a number of years back now, and I was especially impressed with Naveen on that interview, even though Gary kind of took up a lot of the airtime. But his commentary there really helped to level set expectations for me on the performance of Dojo, and really what the expectations were going to be for how much it could contribute to this training effort that they were going into, and gave me a ton of extra respect for Jensen Huang and NVIDIA and just how incredible that team is. And, they have gone basically head to head with Tesla's chip design, and where Tesla was able to eviscerate the competition in inference. And there's nothing that really comes close to hardware 3, hardware 4 on the training side, NVIDIA has not only kept pace, but really stayed ahead, and maybe not necessarily on an energy standpoint, but really from a whole system perspective. There's a lot of parts of the stack that are built on top of the chips that are really things that are much more difficult to replicate than just the chips themselves. And so, there's a lot to be said for CUDA, and then a lot of the support that a lot of the ML stack has for CUDA specifically that's really not present in other things, that makes it really, Elon said he wanted it to just be a drop-in replacement where you just replace CUDA with Dojo in, one line of your code, and then it just seamlessly swaps over. And while that may be the aspiration, that's really, really difficult to achieve in practice. And so anyways, I think that a lot of people have been very, very optimistic about the future of Dojo. And I think that listening to someone like a Naveen Rao definitely will help you to have a little bit more robust understanding of that field, and maybe give you expectations that match a little bit closer to reality.
Yeah, I think we can all suffer from being in the bubble a little bit too much. And that's why, Emmett and I always tried to have, people from outside the bubble to kind of share their thoughts and expertise. And what really struck me with that conversation also, Hans, was like just how impressive what NVIDIA was doing. And, like if you just watch the Tesla presentation and you see all the amazing stuff with that they're doing with Dojo, you're like, yeah, that makes all sorts of sense to me, who doesn't design chips in my day job or work in AI. So really looking for those outside perspectives in order to kind of hone in on the truth is something I really encourage all the investors out there to do. But yeah, Naveen Rao, for those who don't follow him, he's a great follow. Gary Marcus is too. He can be like extremely negative, like bordering on too much for my taste sometimes. But I think it's also helpful to have people like that you're following. So I'd encourage everyone to give them both a follow on Twitter. X still can't do it.
Just thanks I agree with those comments too, and that perspective, especially having an external perspective. Just two things. One is there was a conversation and when they got into the COGS discussion about forward leveraging and renegotiating contracts. What that means is suppliers, look what we've done for you in the past in terms of growth, and then look at these new projects we want you to bid on that have, we're asking for even much bigger numbers on these. And what you do in those situations is, number one, you get leverage on those future projects, but what you do is you actually utilize them for the current projects in production. So that's what that means. I've been talking about this with Herbert, and that's what they're doing. And that's one of the paths to getting some unnatural and continuing COGS reductions. Those are harder to predict. So that's why you hear them. That's why you heard the CFO and you heard Elon saying, like, this is difficult to predict, because it is, but it's happening. And there's no auto company, there's nobody that makes an automobile that's in a better position to do this than Tesla. So that's why they're actually going to get relative and outsized improvements on COGS for that one factor. The other factor is they're actually organized differently than most advanced electronics companies and auto companies, where you heard the vigor and the energy from Lars and from Drew. I'm like, hey, we've got our own list of things that we're pursuing from a COGS perspective. I've been in that position, and we're kind of on the other side of my engineering partners, and I've worked with great engineering executives in the past. It just sounds a bit kind of to the extreme in terms of how they're organized. They have this culture of cost. It's different than other companies. So anyway, I think the COGS reduction program is going to continue, and that forward leveraging of new projects is going to be a big deal, and I think we'll see the results of that. The second thing I want to talk about just really quick is I've also been in this position of when you're moving into a space that your suppliers are already in, and how you talk about that publicly. You notice Elon's very sensitive about discussing Tesla's own battery production relative to their partners. I believe the same conversation is that regarding Dojo. They're in a very precarious time where the H100s and the H200s are on 52-week lead times or on global allocation. And one way to get yourself knocked off on allocation is to basically publicly tout and brag that you are in competition with whom you're trying to get chips from. So for him to be as magnanimous as he is, and he's always kind of been that way with NVIDIA. He's never, but I mean, NVIDIA makes north of 70% on these chips, and they've got to, Tesla's got to, continue to receive supply of these while they're bringing up their own solution. So don't be surprised that entered into the equation in terms of how Elon talked about Dojo. I don't doubt that it's difficult. I don't doubt that there's challenges to it at all. I'm not trying to sugarcoat it, but that is part of the equation in terms of how you speak publicly when you're entering into competition with someone that you actually need something from.
Fantastic points all around, Jeff. Thank you very much. Any other final thoughts before we wrap this sucker up? We're 3.5 hours in. Going once, my dog. Going twice. Sold. Okay, here we go. Thank you all very much for joining us. It was an absolute pleasure. Jeff, Hans, Herbert, Matt, Nick, Yashu, Alexandra, Gary. Who am I missing?
Your dog.
My dog. Thank you very much to my dog. Great job, dogs. If you enjoyed this, like, subscribe in whichever channel you are following this on. We do this every quarter. And then next quarter, Herbert's going to drive the ship because it was freaking out in the private chat. He's like, I don't have control. It's all yours, brother. Thank you, gentlemen. Thank you to everybody listening. We'll catch you on the next one. I hope you have a fantastic evening, and we'll see you around. Bye-bye, everybody.